All right. It is show time. All right. Happy holidays. Welcome to the Millionaire Challenge Mondays. Hope you guys are getting through this holiday period because a lot of my family, a lot of my friends are getting COVID. They're getting this Omicron, right? So this is a great time if you're quarantined to learn about the stock market, learn how to position yourself in the market so that you can get to these millions as fast as you possibly can. So I do this every Monday. I'm using this pretty good tech. I'm using this technology that will allow me to be interactive with you. So what I would like for you to do is I would like for you to go into the comments section, and any stock that you want me to analyze using all of my tools, go ahead. Or if you have a question regarding the stock market, if you any question you have regarding regarding stocks, options, futures, cryptocurrency, please leave it in the comments, and I'll try to answer that question to the best of my abilities. All right, so I'm waiting for a couple of more people to join. If you're not familiar with StreamYard, I believe if you go to the top of the page and click StreamYard, you can allow your face to be seen. Some people don't like their face to be seen. Some people like to leave comments and remain anonymous, and that's cool with me. But what I would like for you to do is go to the comment section, any stock that you want me to analyze, because this is for you, not for me. All right, this is the Millionaire Challenge. All right, so why not learn from a millionaire, right? So I'm going to give you guys some free tools that I have available. Why? Because I just enjoy doing this. I enjoy doing this every week. And to be honest, this is how I do my homework secretly, right? I get stock tips from you guys. I analyze the stocks, I do alerts, and I try to kill two birds with one stone. So the quickest way to making $1 million is not saving $50,000, a year for 20 years. The quickest way to making $1 million is this. All right, I am here. I'm just sharing this. I'm just sharing this video to a couple of different places, a couple of rooms. Just waiting for a couple of more people to log on. We can go ahead and get started. But what I would like for you to do is go into the comments section. And when you go into the comments section, I want you to give me any stock that you would like for me to analyze with my tools, and I'll try to make it happen. All right. All right. So I'm back. So let me go ahead and make this smaller. All right. So happy holidays. Happy holidays. What I'm gonna do is I'm gonna flip to and from Yahoo Finance. So if you give me a stock that I don't know about, and that's rare, I'll flip to Yahoo Finance. We'll try to analyze that stock, and then we'll flip back over to the Thinkorswim chart setup. And this is where I'm going to analyze most of your stocks. Now, if you want me to analyze, what I'm trying to teach a lot of you guys to do is I want you to learn how to analyze the market for what it is, right? We have traders in the market, we have investors in the market, right? We have options traders, crypto traders, but most of us have different time frames and different goals. So as a consultant, my job is to kind of take that information that you guys have and then try to figure out realistically how you can achieve your goals. Because a lot of you guys have unrealistic expectations. And my job is to kind of show you guys that you actually can do it and how to approach the market. All right. So again, I want you guys to go to the comment section. In the comment section, I want you to give me that stock that you want me to analyze. If you want it to be, for a year as an investment or as a day trade or an intraday trade or an options trade, make sure you let me know that information, and then I'll go ahead and analyze it the way that I'm supposed to analyze it. All right, but before we even do that, Let me tell you guys a little bit about myself. I am a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 10 years, over 25,000 hours of trading and investing experience. All right. And anything that I talk about today are the opinions of Joel Harrison. They are opinions. My job is to teach you guys how to approach the market so that you know if you get that stock tip at that barbershop, or if you get that stock tip from your Uncle Al, you'll know how to take that stock tip, analyze that stock, and then figure out, what the goal is. And the goal is to try to make as much, especially if you guys are doing it on your own. The goal is to try to make as much money as fast as you possibly can in the shortest amount of time. Anybody that comes to you and say that there's only one way to invest in the stock market and it's to go through, CDs and ETFs, you know, that's for your foundation. So this segment is not for scary individuals that don't want to make money really fast. All right. It's just not for you. All right. If you're too conservative, if you're too afraid of losing money, this ain't for you. But I'm telling you guys that you can be conservative and aggressive at the same time if you know how to go about the market. And when I first entered the market, I was the same way. I didn't have anybody to talk to. I didn't even know any millionaires at the time. So I didn't know how to approach the market. So what I'm doing is I'm trying to give you guys some of the techniques and some of the skills that I use so that you guys won't make the same mistakes I made, and you can shorten the learning curve. But anything that we talk about are the opinions of me. Investing and trading is easy. A lot of you guys make it hard. Investing and trading is easy. It's dumb easy. Y'all make it hard. So my job is to try to break down everything in its most simplistic way. Because I know you turn on CNBC, you turn on Bloomberg. It's really hard to understand what they're talking about. You might get a stock tip on Shiba Inu, and you don't know how to take that cryptocurrency and what to do with it and where it can go. My job is to teach you guys how to answer the questions A plus B is equal to C. That's the reason why a lot of you guys lose money in the market and you don't know how fast you can actually make it. So what is the Millionaire Challenge? Well, first, I want you to empty your mind. Anything that you've learned in any other class that you've taken, throw that out for now and set it to the side. We're going to look at the market the way that a millionaire looks at the market. Okay. All right. Unfortunately, a lot of you guys take a bunch of advice from your thousandaire friends. And I don't mean that to talk down on you. It's just that that's what our society does now, right? We go on Instagram, we go on YouTube, and anybody that can spend 500 or $1,000 to have these videos created, they're now these super gurus, and they've never done the homework, and they never gone through the process to actually make money. So all they're doing is just teaching you guys how to, fake it until you make it. So my job is to make sure that you guys actually understand what to do and you're actually listening to a person that has actually built his accounts. All right. And that's what you get with me. I'm a unicorn. There's probably, I'm a small percentage of the population that's actually educating, that's actually done the homework. All right. So in the Millionaire Challenge, I want you guys to look at this pyramid and I want you to see where you are. It's very easy to get to level 7, right? 1, 2, 3, 4, 5, 6, 7. It's very easy. Just go out there, get a job, save some money. The hardest part is getting to level 8, level 9, and level 10. So I want you guys to look at this to understand that the first 7 levels are easy. Getting from 6 figures to 7 figures is the hardest part. All right. And I'm not sitting here to tell you guys I got tens and 20, million, $20 million sitting in my account. Right. Our family accumulated most of our wealth in the last 10 years. And I'm going to show you guys some of the techniques that we use. But getting from that 100,000 to 1 million is the hardest because they're numbers that we're not used to seeing. We're not used to seeing, we're not used to seeing $5,000 days or $13,000 days where you're up, or maybe $10,000 days when you're down. So as you start building your accounts, when you start hitting those 6-figure amounts, you got to start thinking a little bit different, and you got to learn how to position yourself. Now, I did do webinar week. What was it, last week or 2 weeks ago, where I kind of explained to you guys how to position yourselves in the market. So I want you guys to take advantage of it. But we're going to learn some of my techniques, which is the What Would Joel Do method. A lot of the tools that I use are very, very fundamental and basic. All right. I use basic flag patterns when I'm trading. I use the 200-day moving average when I'm investing. Very simple. Most of you guys don't even know what those two things are, right? So we're going to go back to the fundamentals and the basics so that you guys can understand what the market is looking for when they're trading and what the market is looking for when they're investing. I did webinar week. The videos are still available for 65 bucks. Is going to $95 next year. You will never see $65 again. And those videos will be available to the 15th. So if you want those videos, it was 3 days, 10 hours of live information, just like we're doing right now with presentations and slides. 10 hours where I taught you guys the stocks, the options, and I taught you how to day trade. I literally told you everything that I do. And I did it in a 10-hour period. You guys have access to, you have access to that video for 30 days. So in essence, it's a 30-day class. So after the 15th and it goes back to 95, those videos won't be available again. It will be deleted out of my Zoom, and then you would have to register for the next webinar week. If you haven't downloaded my app, go ahead and do it right now. It's free. All right, a lot of people use the app to book consultations with me. Like, why not get a consultation with somebody who's actually investing in the market and trading in the market? I'm accessible to you, so make sure you download that app. There is an alert service that's there too for traders and investors. When I'm buying anything in my portfolios, you guys will get alerted first. Today, I put out an alert for Tesla and Apple options, and a lot of people made a lot of money. All right, I was in that Apple trade as well. I broke even, but a lot of my members made a lot of money this morning just trading Apple options. If you need my videos right now, you can go to my PayHip. You can download these videos. Again, webinar week consisted of this video, stock party, options party, and day trading party. As you can see, all of these prices are going up. You guys got it for $65, right? Why not take advantage of it? And if you want your charts to look like mine, because I have some of the most beautiful charts that are out there, then you want to download the Thinkorswim chart setup. I'm almost done. I do have an ultimate membership program. It's $49 a month through the What Would Joe Do app. Take advantage of it. You get access to everything I got, and you get access to all the webinar weeks. I don't really need to even go into detail. You pretty much get everything. These are the different places. These are the different places that you can find me. You can go to the Insider Trading Room. There's over 20,000 members there. You can go to the Insider Trading on Instagram. There's over 20,000 members there. You can go to my smaller room, which is the Ninja Trading Room, where we're trading. But the only way that you have access to the Ninja Trading Room is you have to buy some type of product. I don't care what it is. It could be a one-on-one consultation. It could have been webinar week, but you get free access into that room. And please, guys, can y'all help me with my YouTube page? Because I just started it and it's struggling right now. All right, so if you guys could go to YouTube and not register there, but become part of my club, please go to YouTube. On the Insider Trading page, I kind of put a lot of my receipts, some of my biggest trades, my Netflix, my Apples, my Nvidias. You're gonna find them there. I post my receipts all the time because I'm about legitimizing myself to let you guys know that I'm actually a real trader using real money, using real strategies. You don't get that out there. And 2022 is about vetting the people that are teaching you. All right, I'm almost done. And remember, the quickest way to recover losses. I know a lot of you guys that are out there that are losing in some of your trades. And I'm telling people, as an investor, if you're investing in the market, do y'all know the quickest way to getting 100% return is buying something that's 50% off? A lot of people don't know that making money in this game is about the numbers. It's about the numbers. And we get so caught up in, oh my God, Tesla's down 30-40%. I'm selling it. And I'm like, guys, the market is rigged to go up. And if you believe Tesla is that company that's going to continue to grow in the future, then you have to buy these things when they're on sale, just like with real estate. So what we're going to start doing as far as the Millionaire Challenge is, I want you guys to look at stocks like they're just inexpensive pieces of real estate. That's all stocks are. They're inexpensive pieces of real estate that you can buy outright. Imagine if you can go out there and buy any piece of real estate you want cash, right? I want you guys to think that way. Every time you buy a stock, you just built equity in yourself. And I don't think a lot of people understand that. And you can sell it for whatever price it is at that particular time. So you got to start building equity in yourself. But you want to start with buying some of the largest companies that are out there, the Apples, the Amazons, the Googles. And when they're on sale, you got to start understanding how to buy these stocks like anything, Apple, a Amazon, a Google, a Microsoft. I automatically know that they drop 20% every year. You should know this. So when they drop 20%, you should have alerts where, on your phone, you get an alert that, hey, Apple, the largest company on the planet, is off 20%. It's time to buy it, right? And that's what a lot of you guys are not doing because you're so afraid of the stock market because you don't know what to look for. So we're going to start analyzing your stocks. All right. So that's, I hate doing this, but I have to do it. But let's get to your stocks. Let me go to the comment section. All right, we got a lot of great stocks. Let me change the banner. Let me change the banner real quick. Let's take that off. Let's bring me down here, make the screen a little bit bigger. And let's get to your stocks or your questions. Now, I want you guys to give me one stock, all right? Sometimes you guys come on and we'll list 20 stocks, all right? I want you to give me one stock that's $1 billion or higher in market cap, and then I'll try to analyze that stock for you. All right, but I get it. You guys come on quickly, and you're like, hold up. I want you to look at all my whole portfolio. All right, these are some popular stocks, so I'm gonna look at all of them. But let's go ahead and look at Tesla. So when I'm analyzing you guys' stocks. Hold on. When I'm analyzing you guys' stocks and you're using something like Yahoo Finance, first thing, y'all need to know how big these companies are. Y'all have no idea how large a company is because y'all know the price of everything and the value of nothing. Jay-Z just said that in one of his verses with Drake. And when he said it, I was like, oh, back in the day when somebody would say a line and you'd be like, oh, shoot. And I was like, I don't even think a lot of people got that message, right? But in the stock market, it's the same way. You guys know the value, you guys know the price of everything. The price of Tesla is this, but you don't even know the value of it because you think that the value is here, right? You think that the value is here and the value is actually here. And let me tell you guys a story about Tesla. For you guys that are on right now that are scary or that you're listening to these people, and I get it. When I was growing up, my mother and my father grew up poor, and they went out and they got nice 9-to-5 jobs. My mom worked at the Internal Revenue Service, so I got to do my taxes every year. My dad was working for Delta. They had these nice little corporate jobs, right? They had their 9-to-5s, their 401ks. And no, they never really learned how to be aggressive in the market because aggressive was going out and getting a whole bunch of jobs. So, I'm the pioneer of my family as far as, investing in the stock market. So my mother, after she retired, after a lot of people retired, they realized that, the amount of money, if you had told them 30 years ago that they were going to be able to retire with $500,000 or 250 to about $500,000, that's the average that I've been seeing amongst my mother and father's peer group. If you had told them 30 years ago their houses were going to be worth $300,000 or $400,000, they were going to retire with $300,000 or $400,000 in their portfolios, they would have fainted. And then when you fast forward 30 years later, and their income started to go up in value, and the cost of everything started to go up in value, they realized real quickly that that amount of money was not enough to retire off of, because right at the end, when they were retiring, they was probably making $100,000 a year. So if you're making $100,000 a year, I don't care who you are, you're accustomed to living that way, right? And if you got a $400,000 account, you're going to blow through that money. So most of our parents have to go back to work, right? So it was a learning lesson for me to not make that same mistake, because although they were very, very conservative, they were not aggressive in buying the things like the Microsofts and the Apples and all of these other companies that can grow 100% in a year. So most of you guys are positioned perfectly, right? You got your jobs, you got your 401ks, but most of you guys are relying on your portfolios to retire off of because you don't know what the average is for that portfolio to grow a year. I know that number. That number is right around 15%. Your portfolio is averaging about 15% a year. Now, that's great. And that's great for your foundation. I mean, your house also, if you own real estate, is appreciating at about 10 to 15% a year. But if I got a house appreciating at that level, or multiple businesses or multiple real estate that's growing at that rate, and I got a 401k that's already growing at that rate, why am I trying to buy the same indexes on my own? And that's the mistake that most of you guys are doing. The financial planner and the money manager that's managing your funds and your foundation, they're doing a great job at having to make sure that you're secure and have money in the future. But what you should be doing on your own is buying the Apples, the Amazons, the Googles in a separate account where you can be way more aggressive with about 10% of your assets. And that's what nobody is teaching. They either teaching you how to be super conservative, so you're going to end up being just like your parents in the future, or you guys are so aggressive that when you're trading and you're making money in that crypto, like, okay, I took a $5,000 investment and bought Bitcoin. Let's look at some of this stuff while I'm talking about it. I took a $5,000 investment. I bought Bitcoin. I did, right? And my $5,000 investment, as you guys can see from this chart, from 2019, if you had $5,000 in 2019 and I had $5,000 in 2019, that $5,000 grew to $50,000. Now, I'm not telling you guys to run out there and buy Bitcoin. I'm just saying that I got the 401k and the IRA just like you. I have the real estate just like you, but my real estate ain't growing 10 times its value in 2 years. And that's where you guys are going wrong, because you're not thinking on how do I get to these millions a lot faster. It's just numbers. If I know that something is growing at a 10% or 15% rate a year, I can pretty much tell you where it's going to be in 10 or 15 years. You know, if you had $1,500, I've already done the math. If you had $1,500 and you had if you had about $1,800, no, it was $1,500, and you had invested it in the S&P over the last 12 years, it would have taken you 12 years for that money to get to $1 million, right? And that's during this explosion of the stock market, right? But you got companies like Apple's and Amazon's that have been doing it in like 6, 7, 8 years, right? You know, I had a Tesla investment. Everybody thought that I was crazy when I was buying Tesla 5 years ago. And I said, you know what, guys, this Tesla is going to buy me a Tesla. And when I tell people what it did, they don't believe me, right? But then they come over to my house, they see the Tesla in the garage, and they're like, you know, Joel might not be like these YouTubers on TV that just be flexing. He actually has these things, right? And when you go and you look and you see what Tesla was 5 years ago, you know, and you see the price of it, you're like, hold up, you could have bought Tesla at $64 or $100, and it's now $1,000. That's 10 times your money. That means a $10,000 investment, guys, could have bought you any Tesla that you wanted, right? And most of us had $10,000 to play with. You know, even if you had just put $1,000 every single month for 12 months and then let it sit for 5 years, you could have bought whatever car you wanted to, and you still could have been conservative with the boring 401k, the boring IRA, the boring real estate. But the problem is that you guys are either too conservative or too aggressive. My aggressive traders that are buying crypto and making a whole bunch of money, they're going out there and spending it, right? They done made all the money. They done spent it on stuff like exotic cars and, you know, nice clothes. And they might have, and, you know, some people are responsible. They put new roofs on some of their real estate. But then now they're at square one. And now they got to wait another 4 years, maybe for that money to grow. But what ends up happening is they don't invest in themselves. So it's a catch-22. That's why you guys need to do both, right? You need to be aggressive and conservative at the same time, but you can't figure out how much something can grow to if you don't know how much it's worth. If you know the price of Tesla, how do I know what Tesla can go to? That's how 99% of you guys approach the market. I don't care about share price no more. If you come to me talking about share price, we gonna fight. Because I'm like, I don't care about the share price. I care about the market cap. Joe, you should buy Shiba Inu. You can buy 40 million coins for $1,000. I'm like, I don't care about how many coins I got. How big is Shiba Inu? Did y'all know y'all could go to Yahoo Finance right now, and you can literally type Shiba Inu, and did y'all know y'all literally can see how much it's worth? It's worth $20 billion. Did y'all know that? Did you know that your money will double when this goes from 20 billion to 40 billion? A lot of y'all don't know that. A lot of y'all sitting here right now waiting for this to go to $1, and you don't realize that it takes all the money on the planet for it to get to $1. And that's because you're not educated in the market. And your 5th grade and 6th grade kids know this because that's what I'm teaching them. So it's nothing wrong with being aggressive this way, but you guys got to have everything. I got to know how much it's worth and what it can go to. How much it's worth and how much it can go to, not the stock price. The stock price is an illusion. And I keep telling people that the stock price is an illusion. All right. So when you're taking this millionaire challenge, you gotta figure out how you're positioned in the market, but you gotta be aggressive in some way if you're trying to get to this money really, really quickly. And my mother, I had to fight her. I had to literally fight my mom to buy stuff like a Tesla. So we'll go back to Tesla. All right. When my mother bought Tesla, Tesla was I think a $10 billion company. No, it was $100 billion. I think it was like 25 or 50 billion. All I know is she got 1,000% return. And she thanks me every day because she's like, I've never seen money grow that fast ever in my life. Right. And she didn't even have to touch all of her conservative things. Right. She had a separate account. Right. That she I think she bought Tesla when it was 300 or 400. I just know that she has a 1,000% return, right? So $1,000 investment went to like 10 grand. And all she did was buy something, right? And just sat back and waited 3 or 4 years. She was aggressive and conservative at the same time. But what she didn't know is when we sat down, we kept talking about what we thought Tesla can go to. And it wasn't the share price. It was the market cap, because this share price, I think, reverse stock split it one or two times. So even when stocks reverse split, you can't tell where it can go to. Can this go to 5,000? Can it go to 6,000? The only way that you can figure that out is by this. We know that Tesla is a $1 trillion company. Right here, it's telling us right here. How long did it take for Tesla to grow 10 times its value? Well, if this is $1 trillion, right? It needs, if this was $1 trillion, that means, and this is $1,000. What's 100? Whenever it was $100, it was 1/10 the size that it was right now. So y'all know back in 2019, you could have put $1,000 in Tesla. It would have been worth 10,000 today, or $10,000 in Tesla, it would have been worth $100,000 today, or $100,000 in Tesla, and it'd be worth $1 million today, just off of its market cap growing. Not a share price. We don't care about this. The share price is going to go up when the market cap grows. But you guys got to look at this. And I don't see anybody talking in value. I don't hear anybody talking in value except the people that's on TV, right? They'll talk about different stocks. They'll talk about when they hit the 200-day, they start talking about what value it can go to. That's how you know that you're talking to people that really understand money. Anybody that talks in stock price, they don't really understand the market, because you guys believe this can be $5,000 tomorrow. And my brain doesn't work like that. My brain says in order for this to go to $5,000 a share, this has to go to $5 trillion. That means I need $4 trillion to be invested in Tesla, right? Can it happen? Yeah. But a lot of the money has been already made in Tesla. Doesn't mean that you guys can't buy it again. But you guys got to start looking for things that can grow 10x, something that's small that can grow, something that's a billion that can grow to 10 billion. You have a better chance of making 10 times your money when you're buying something that's a billion that can go to 10 billion than something that's a trillion that can go to 10 trillion. All right. And that's just basic business 101, right? That you guys got to start implementing in the way that you guys look at the market. So let's analyze Tesla, right? Tesla's $1 trillion company. In 5 years' time, it went from 55, it went from 55 to 1,000. Let's see what it did in a year. In a year, the lows of Tesla was 597, the highs were 1,000. So anybody looking to double their money or triple their money in 12 months, you're being unrealistic. Why? Because in the last year, the lowest price was, says it right here. The lowest price was 539, highest price was 1,200. That means the person who bought Tesla at the lowest price and held it to the highest price only made 100% return, which is huge. But if you're looking for this to go to $3,000 a share because Amazon's or Google is around that, or is around that price, then you're looking at the market like a rookie. All right. So, what are the best times to buy something like a Tesla? Well, when you pull up Tesla, I tell everybody, I'm going to give you guys this for free, right? This is going to be like a magic show. Before we even start, I don't care what stock y'all give me. No trader will ever do this. I don't care what stock y'all give me. Here are the rules. We're going to pull up this blue line. Anytime that stock hits that blue line, we gonna buy it. 100 days later, you should be up in value. All right. All right. Every stock that we look at today, I'm gonna pull up this blue line. Whenever it hits it, 100 days later, you should be up. But the rule is that that 200-day or that blue line has to be angled up or it has to be sideways. All right. This is the what would Joel do method of investing in the market. It's the same way that the millionaires and the billionaires are investing in the market as well. There is a little twist. I have an indicator that's on there. I have a couple of indicators that are on there that are also going to give me a little edge on when I'm buying. So let's look at Tesla. Tesla, I'm going to show you guys how it works for free. There are people charging y'all. Actually, they ain't even charging y'all to do this because they ain't even showing y'all this. I would say people are charging y'all $10,000 for this, but the $10,000 classes don't even have this. And this is the fundamental basics of mutual fund and pension fund buying. And it works on crypto, stocks, Forex, futures. I don't care what you trade. It works. It's price action. So when Tesla rolls up in price, you guys see this? Watch this. When it hits the 200-day moving average right here, you had 2 days to buy it. And then it started to go up in value. All right, I have the John Carter here, 1, 2, 3. What would Joel do method? Joel would have been somewhere in there, and you didn't even have to wait 100 days. You was up 2 days later. Imagine only struggling in a stock for 1 day, and then the rest of the time is going up in value. All right, that's what Tesla did for you. And everybody knew to buy it here. Why didn't you know to buy it there? Y'all know when that period was? It was the March lows. You remember COVID? Everybody was losing jobs. Why would somebody buy Tesla? Everybody's losing jobs. Y'all know when I bought my Tesla? 2020. Oh, people were buying it. It just wasn't y'all. It was the rich, right? Because we making money hands over fist because while everybody's crying, Joel is buying. All right. As long as this blue line is angled up and it hits that 200-day, I'm buying it. I don't care what they're saying on TV. All right. This is the technical side of buying fundamentally good companies. I'm going to say that again. This is the technical side of buying fundamentally good companies. What makes this a fundamentally good company is it's in the top, 100 companies and market capitalization. 2 is fundamentally good because if everybody's willing to pay a higher price than the average, then it's a fundamentally good company. It's what pension funds, mutual funds, millionaires like to see when we're investing. The secrets that nobody is telling y'all. All right, so as long as we're above that 200-day, it comes down and hits that 200-day again. Do we ever see it again? We got real close to it. Oh, there we go. We hit it again right here. Y'all know when this was? This was in June. Now, it didn't go up in one day like it did last time. This was what, May 17th? All right, and from May 17th, and let me move my, I think my picture is lower. Hold on. Yeah, my picture is at the lowest that it can go. This was May 17th. By June the 17th, 30 days later, you didn't have to worry about it again. Tesla rose in price, made you a whole bunch of money. Didn't have to read any books. You didn't have to read no papers because you didn't have to. It's a fundamentally good company because it just is. If it's above the 200-day and this is angled up, it's telling you that it's a fundamentally good company. All right. And now we're sitting up here. Okay. We're sitting way up here. Now, for those that wanted to day trade it, all right, day trading is something that people use to make money intraday. It's for traders that don't have a 9 to 5 and they need to make money in the market. So they make money in the market by being able to, they're either doing it in the options market or the stock market, but they'll buy a stock and they'll try to buy it over and over again or one time and try to earn a very, very high return. Now, I want you guys to look at something. Tesla was up 2% today. If you were trading the options market, I want you guys to see this with your own eyes because a lot of people don't believe it, right? They're like, Joe, there's no way people are making 30, 40, 50% returns in the options market. But I want you guys to look at this. The options were up 20, 30% today. Okay. 20, 30%. They were actually even higher earlier. The stock was only up 2%. Imagine in 24 hours, you're making a 20% return. Y'all remember how I told you how your portfolio is earning an average of about 10 to 15% a year? Y'all know sometimes it takes you guys 2 years for your portfolio to grow 20%. And here Tesla's doing it in 24 hours. And you got people that's saying, oh, don't worry about investing in companies like this. Just stick to your S&Ps and your NASDAQs and you're going to be okay. Really? I'm okay. I have my portfolio, my boring account that's making 10 to 15% a year. I also have a separate account that I buy into stuff like this so that I can make faster, higher returns. And it's about 10% of my total assets. You got a $100,000 account, you shouldn't be trading with no more than 10 grand. Because that 10 grand could have got you to $100,000 and surpassed your boring account in a couple of years. And I used 1/10 of the account because it grew 10 times faster. It's just numbers. All right. But I put out a bat signal today and I told everybody, hey, it looks like there's some unusual options activity. Y'all are going to hear me say this a lot. Now, you're not going to be able to see it. I think it's behind here. But this $1,100 strike had 80,000. So that you guys can see it. This option had early this morning, it had about $30,000 contracts being bought at like 9:30, 9:32. That's unusual because when you go over here and you see 30,000 and then you don't see anything on the put side or the call side, somebody knew something. So I told everybody to buy this option. Now I want you guys to see with your own eyes how much money you could have made because a lot of you guys don't believe it. You're like, yeah, I hear about these options, but people don't really be making this because if everybody knew about this, Joel, wouldn't everybody trade it? And I'm like, no, 10% of the world owns 90% of it. Some of you guys are not meant to make money. Some of you guys are not meant to be millionaires. Only a small percentage of us can be that way because in order for you to become a millionaire, you got to go take it from somebody else, unfortunately, right? So I'm trying to teach you guys how to be on the taking side and not the giving side. All right. So this is what I put out earlier. If you notice, this would have been my entry on that option. My entry on that option would have been about $2,900. All right, about 3,000 bucks. Imagine taking $3,000, guys, at 10 o'clock, and by 10:30, 30 minutes. In 30 minutes, you made $1,000. You made a 33% return. Let's see how much that return actually was. That return was actually about 30%, right? Imagine making a 30% return in 30 minutes. These are the types of trades we see every single, like guys, we see these trades every single solitary day. Now, it doesn't have to be on Tesla, but we see these types of trades happening. And there wasn't anything unusual happening in Tesla. It's just that it was Monday. It's hedge fund Mondays. Everybody knows that hedge funds love pouring money into the market. Mondays are like the easiest day to make money. All right. Because hedge funds get money from over the weekend, and hedge funds and pension funds' jobs are not to put money in a savings account. Their job is to put money in the market. And when they put that money in the market, stocks are going to go up in value. All right. It's just simple common sense, right? If you got a pot, even if you have vegetables in it and you get more vegetables over the weekend, and then you pour those vegetables on top of the vegetables that are already there, you're going to have more in the pot. And that's what's happening with the market, right? All right, so you could have made a quick 30% return. Let's see if it got higher than that. I guess it didn't, but early that morning, the only reason I knew that it was going to go to $1,100 was because that's what the option has said. Now watch this. When we go and we look at the actual stock, you guys are going to be like, how come nobody's ever teaching us the market this way, Joel? And 9 out of 10 times I say because the people that you guys are learning from ain't really trading. How did we know that this was going to $1,100? There was a whole bunch of reasons we knew that this was going to $1,100. All right. So many different reasons. The options market said that it was going to $100. Okay. I mean, $1,100. So if you were in it, you know to buy it here and then get out at $1,100. We also knew that it had a possibility of going to $1,100 because of its ATR. All right. If you got a day trader that don't know what the heck an ATR is, run. How the hell? I'm sorry for cursing during the holidays. How the hell are you trading the market and you don't know what the stock can go to? Like, how do you not know the average that it does? Now, some traders come to me and they say, Joel, every day I take the highs and the lows and I look and I see how big that is, and I notice that Tesla moves about $50 from the lows to the highs. Those type of scientists and traders, I respect, because I say, okay, you took the time to actually see how much Tesla moves on a daily basis, right? But there is an easier way. You can just pull up the average true range, and it's going to tell you that in the last 14 days, Tesla averaged $50, a move. So before you even started trading, you had $50 in your mind. A lot of you guys don't trade that way, which is ridiculous to me, because I'm like, all right, if you get in at 1075, like, when do you get out? Joel would have said, all right, it had the possibility of going to 1125, right? So 1125 would have been right around the maximum I thought that this thing could actually go. But you guys are trading and praying. You're like, oh, I'm getting in. I'm like, when do you get out? I don't know. I just get out at like 1, 2 o'clock. I just get out when I just feel like it's not going to go up anymore. And I'm like, whoa, you're gambling. I like that you're trading that way. But we all knew that the maximum that Tesla was probably going to go was going to be like right around that 1120. We knew it was going to at least go to 1100. And that's what it did. So I took all of those factors so that if I was going to trade it to the upside, I knew where it was going to go to. All right. This is for you traders. All right. Now that I got all the teaching out of the way, let's breeze through your stocks. All right, same process. All right, now watch how fast I do it this time. We go to Apple. How big is Apple? That's the first thing y'all should say. How big is Apple? I don't care that it's $180 for the share price. I don't care about that because that could have been $18,000 a share and I still would have bought it. Some of you guys, it's going to take you 5-10 years to get over that because you have this I gotta have a low number and more shares mentality, frugal, cheap mentality. So you only look for stocks that are like $5, $10, $15, still buying penny stocks. It's going to take you guys a long time to start thinking like millionaires because you're still thinking like somebody that's poor. All right. And I'm trying to be as real as I possibly can. To get over it, you shouldn't care about this. You shouldn't care that Bitcoin is $50,000. If you can go buy $500 worth of Bitcoin, even though it's $50,000, you know that you're on your way to being a millionaire because it's an illusion. You can buy any amount of these stocks that you want to, right? They have fractional share investing. I don't have to have a full $3,000 to buy a share of Amazon anymore. I can buy $300 worth of Amazon. And if Amazon goes from $1 trillion to $2 trillion, I'm going to double my money. And all that matters is, can I double my money? Can I get 10x? How do you know if you're able to get 10x if you guys don't know the value? Y'all know the price of everything, but the value of nothing. The value of Apple is $3 trillion. People, I'm in Apple too. I don't have hundreds of thousands of dollars in Apple, but I got, 10 or 20 grand in it. I'm not expecting my 20 grand to go to $200,000 no time soon. Because in order for that to happen, Apple has to go from a $3 trillion company to a $30 trillion company. Guys, you would need $27 trillion to be invested in Apple in order for your $180 to go to $1,800. It's simple math. All right, simple math. It doesn't mean that you can't buy it. It doesn't mean that you still can't make 10, 15, 20% a year. But expecting Apple to go to 2,000 a share because Amazon's 2,000 a share because now you can buy more shares is a rookie, cheap way of looking at the market, not the way a millionaire or a billionaire that's handling a fund is thinking. We only care about this. If this can grow, I don't care if this was 180,000. I don't care because if this can grow double or triple, no matter what my investment is, it's going to make double or triple. Quit looking at this. It's fooling you. It's an illusion. That's why they do it. The only reason why Apple did a reverse stock split was because they knew that, I'm sorry to say this, idiotic traders were going to just buy it because they were going to say it's $100 a share. It can go to 200 or 1,000. And they artificially inflated their stock just by doing a reverse stock split. It didn't create wealth for them until you started buying it up because the mentality is this doesn't look like it's a lot of money. And it's actually the largest company on the planet. It's literally the biggest thing on earth, the biggest company on earth. And you make your money from the growth of that company, not how much money they make, but how much it grows, not how much money they make, how much they grow. So if it grows from being half the size of the planet to the full size of the planet, you double your money. And that's what a lot of you guys don't understand. So I own it, but I'm not expecting it to make me a whole bunch of money like a Tesla, right? You got to start thinking like a millionaire, all right? Let's look at Nvidia. Oh, well, let's look at the chart. So again, when we look at the chart, what are the best buying opportunities for Apple? Just like Tesla, anytime it touches that blue line, we gonna buy it. Anytime it touches that blue line, we gonna buy it. All right, watch in amazement. I'm telling y'all, every stock we look at today, y'all are gonna be like, Joe, investing can't be that easy. And I'm like, it is. You just been listening to the wrong people. All right, and luckily you were able to log on today. And I call out everybody. People hate me. Educators hate me. Joel, you just be calling, you making me lose business. And you just, I'm like, well, then you should be legitimate. Like, I'm sorry, you teaching people the wrong thing. You don't even teach them the 200 day when every time it touches the 200 day, people are buying it. And this is what they talk about every single day on TV. They talk about the 200 day moving average, the 100 day, and the 50 day all day long. All day long. That's all they talk about. Market cap and 200 day. Market cap and 200 day. It hit the 200 day. On this date, which was 2016, it gave you 1 day to buy it. Then it came and it hit the 200 day again. On this date, it gave you 4 days to buy it. Then it went up in price. Then it dropped, gave you a chance to buy it for you options traders looking for 5, 6, 7 day, 2-week trades. Look at this. Look at all these easy times you could have made money on Apple. This was a biggie. All right, this was 2018. They was impeaching Trump. More than 100 days, but then it finally got it together. Now the 200 days angled down. We don't really want to buy it when it's angled down. We want to buy it when it's angled up. Touches it right here. Y'all know when this was? The March lows. Joe, there's no way people are going to be buying iPhones. Word. Word. We hit the 200 day. Y'all think all of a sudden on March the 25th, there was an influx of iPhones, everybody started buying them, and then the stock started to go up in price? Nah, it was people like me that had capital, who doesn't have a job. This is my job. So when the market dropped and I'm sitting on all this cash and everybody is crying, Joel is buying. And I bought here. And I said, everybody who's coming along with me, Joel, you are an idiot. I can't believe that you're teaching people to do this. You can see it with your own eyes that people are out of work and dying. And I'm like, look, I got people dying in my family too, and the market is going down as well. But if the market's going to crash and money's going to be zero, I might as well invest in something. Y'all still, even in a crisis, y'all think like poor people. You can't do that. You got to start thinking like the rich, right? We want to buy during times of crisis. When people are crying, that's when you should be buying. I'm sorry, that's just how it is. When real estate dropped in 2008 and 9, who ended up making the bag? Whoever had cash. It's just simple economics. All right. And then the simple economics are, when do people buy stocks? When they hit this blue line. And a lot of y'all don't know this. This is like the most used indicator on the planet, universally created so that everybody on the planet understands if you are a money manager, when to buy. It's like the secret thing that every money manager knows. Everybody knows the 200-day moving average. It's education 101. We hit it. It started to go green. Now that's my little indicator that I use to make sure that it's right. And then it was off to the races. So easy. Then it came and close to it again. It turned green. Then it was off to the races. Then it came down, hit it again. Y'all are seeing this with your own eyes. It went green, 1, 2, 3, and then it was off to the races. How many times did y'all see it lose? 0? And where are we now? We way up here in the stratosphere. All right. Learn when to buy things on sale. Let's look at Nvidia. All right. Nvidia is my favorite. I've been talking about buying Nvidia since 2015, 2014. My son's been buying it. I think he owns like 10 shares. This cat, 14 years old, got 10 shares of Nvidia. Y'all do the math. All right. Nvidia is let's start from the fundamentals. How big is Nvidia? I don't care about the stock price. Nvidia is a $309 stock. It's a $771 billion company. It's almost $1 trillion, and most of you guys never heard of it. They're involved in everything. They're involved in if you pulled up Yahoo Finance and you didn't know anything about it, right? Look, they're even telling you what the market's going to do. Y'all know that when the market falls, it only falls 10 to 20%. When I saw this, I was like, oh, okay, when the market drops 20%, the whole world's gonna be afraid, but I'm gonna start buying right around the 20% mark because we all know that the market drops 10 to 20%. Anything more than 20%, they call it bear market. Even when the market dropped during the March lows, I already know that was a 34% drop. These are just numbers I know. All right, by just going in there and doing the numbers because I want to buy something that's 30 or 40% off so that when it goes back to its highs and you got a 90% chance that the stock will go back to its all-time highs, you got a 90% chance that a stock will eventually hit its all-time high again. So if it drops 30 or 40%, I'm going to make 60 or 70 or 80%. I'm going to kill my little boring portfolio, my real estate that I have, just by buying it on sale. You add options into the equation, that's when you become a super trader. All right. But if you don't know anything about the stock, you can go here, you can read about it on Yahoo Finance. Right. I hear this out. I don't have time, Joe. You don't have time to make money. All right, fine. Let the 10%ers make all of it. Continue to make 10 to 15% a year when you could have easily, like my son, bought this stock 5 years ago when it was $27 and now it's $309. 10 times your money. He's buying a stock at $30, $40. Now it's $300. You're buying it 10 times higher than when my 14-year-old son was buying it when he was 9. They were talking about the metaverse and everything and semiconductor companies back when they were 9, 10, not because I educated them. It's just that you guys got to start listening to your kids, because if you listen to your kids, if you listen to the youth, you will know what to invest in the future, because it's going to be them that change the world. We so much think that we know more than them that we don't pay any attention to them. They are a part of your investing future because, believe it or not, older people, we get so set in our ways, we think everything's going to be just like it is right now. We don't understand the metaverse. So because it's different, oh, I'm not going to learn about it, but it's the future. I'm not going to learn about cryptocurrency. Oh, word? That's what your kids are buying and selling every day. You think they're just going to give it all up? No, it's going to be the future, especially for you guys that are in finance. It's no reason why you shouldn't be learning about crypto. You should be doing it just because you need to educate yourself on the other markets that might grow in value. That ego is what stops a lot of us from making a whole bunch of money, because we think we know everything. This is a process that you have to continue with for the rest of your life. You got to forever be in tune with the market to know what the next best thing is, right? Electric cars was easy to call, very easy to call, just by watching and seeing how Tesla started to grow. And then every single other company decided that they were going to have to adopt the same model if they wanted investor funding. So many of you guys think that stocks go up because of how much money that company makes. The stock is not the company, and the company is not the stock. That's the one thing that y'all don't know. It's separated. You make your money on the investment side. You don't make money on the amount of cars Ford sells. You make money on Ford because as an investor, you say to Ford, if I invest this money in your company, you better create electric cars. And the more money you get from us, we want to see more and more electric cars come out, because we saw Tesla grow. When you start adopting that way of thinking, then you would have known that Ford was a no-brainer. General Motors was a no-brainer. But if you're not a true investor, you're not going to see that. If you haven't made money off of the market, you're not going to see that. And a lot of educators, unfortunately, see things for what they think it is and not for what it actually is. All right. And I'm trying to teach you guys how to, if you're involved in the market, you know how to grow with the market. Investing in the market is very, very easy. So when you look at something like this in the 771 billion with a 1.37 beta, even if you didn't know anything about Nvidia, you could have said, man, I know this crazy dude that came on here and put me onto some free advice. He ain't charged me nothing for it. because he realizes that you make more money in the stock market than any education class if you know how to invest, right? And I can give this to you for free because it doesn't matter. There ain't no competition in the stock market. It's trillions of dollars. Unless you got trillions, it ain't no competition. And you mean to tell me, Joel, from 2016, every time this stock, now this dude didn't show me every stock so far, and every time it touched this little line or got close to it, it was a buying opportunity. Now this is angled down, all right? So it took a long time, and that was a little struggle period for Nvidia, but that was also during the Trump impeachment. Okay. Y'all see how during the same period, most of these stocks went down? And then all of a sudden, once things started to grow again, 200-day, we hit it, back to buying it right at the 200-day, back to buying it right at the 200-day. Hold up, Joel. You mean to tell me I didn't have to do nothing? You didn't have to do nothing but sit back, wait for this bad boy to hit this blue line, wait for this to go green, and then it was off to the races. Yep. Off to the races here. Happen again right here. 1, 2, 3. Off to the races. Long as this blue line is angled up. Long as that blue line is angled up. So where we are right now? We are right here. Where do you think we can go? We either go into two places. We either go into here, which is 340, back to all-time highs, or we're going to drop back to the 200-day moving average. The 200-day moving average is the mean. We usually revert back to the mean. Stocks usually hit their 200-day once or twice a year. It's rare. Once or twice a year. Once or twice a year. Right? So you got to set alerts for yourself. All right? How do I know when it's going to get it, Joel? I got a 9 to 5. We'll set an alert. Have that alert go to your text messaging like I do. I've been on the beach sometimes and I've gotten a text. Nvidia has reached the 200-day. Oh, perfect. Let me go buy some. It's that easy. You can set an alert right now while we're doing this session. All right. Some of you guys just have excuses to not want to make money, and that's fine. Again, 10% of the world owns 90% of it. You have to lose money so I can make money. You have to earn 10% so I can make my 90 to 100. It's just simple math. You just got to decide what side you want to be on. You want to be 1,000 there for the rest of your life, or do you want to kind of push and try to get to those millions? It's up to you to decide. I'm going to think differently. I'm going to remain conservative. But ooh, what if I can be 2 people at the same time? You can. What if I can be 3 people at the same time? You can. It's not all about being one or the other. Like that's it's so funny to me that cats are like that. I'm like, you can be super conservative. You can be the most conservative individual on this planet, like my mom was. But my mother also had Ethereum, and she rode that $300 investment to $4,000. She also was in Tesla, and she rode that bad boy up until it grew 10 times its value. And she's like, I've never been in a position where I was super conservative and aggressive at the same time. And she's now understanding. She's now putting $100 into the market every single month. That's all she does, $50 every 2 weeks. My mother's on the $50 every 2 weeks plan, and she's like 70 years old. And she's got a 5 to 6 figure account that she started with zero in only a couple of years ago. All right, you guys got to know how to go about doing it. All right, so that's Nvidia. Let's look at Ford. Same thing. Before we even look at Ford, how big is Ford? How big is it? I don't care about the stock price. Some of you guys lucked up and made money on Ford because you was like, Tesla's $1,000 a share. I'm just going to go buy Ford. Well, if you had adopted that strategy from 1998. Y'all see this? From 1998 all the way till 2020, Ford went down in value. I tell this story all the time. I hated Ford. Everybody knows that I hated Ford. Anytime anybody talked about Ford, I was like, man, get that crap out of my face. It's been a losing trade, just like oil. But y'all steadily buying it up. Buy low, sell high. Joe, right? Buy low, sell high. No. Where did you learn? I mean, I understand buy low, sell high, but you buy low, sell high on the 200-day. You don't buy low, sell high when the stock looks like this. This is y'all. This is y'all's version of the buy low, sell high, right? This is 2000 and let's go back to 1998. I don't even think it goes back that far. This was 2007. All right. Ford started to go down in value right around this time. This was 2015. But that line is angled down. You remember how I told you guys it doesn't work when it's angled down? Doesn't work when it's angled down. That means the money is flowing out of that stock, and y'all sitting here, buy low, sell high, Joe, buy low, sell high, buy low, sell high, buy low, sell high. I'm like, you learning from a thousandaire. Ain't no hedge fund or pension fund excited about buying Ford. I had friends, Joe, you don't know what you're talking about. I was like, all right, wait till I get to, I was like, man, wait till I get to 1 million, boy. Y'all gonna hear my mouth every day. And I was just quiet and humble. Just ate my humble pie. Ate my humble pie. I said, because I don't have no legitimacy until I actually make some money. All right, so I just shut up. I said, I haven't made it yet, but, I listen to TV. I listen to millionaires now. I stopped listening to thousandaires because when I was listening to thousandaires, I couldn't make money. I started listening to billionaires and pension fund managers, and they started telling me what they were looking for because they're the ones that move the market, not y'all. And what they were saying was this was losing money, just like oil. I knew back in 2015, 16, you shouldn't be buying oil or buying car companies, except Tesla. Why Tesla? Because it was electric. It went against what oil was. Ford was going down in price. All you had to do was look up and say, blue line down, don't buy. Y'all see how simple that was? Y'all will sit up all night with these study sessions trying to figure out if y'all going to buy something. Don't know why y'all buying it. And I laugh because I used to be there too. All Joel said was blue line down, don't buy. Blue line down, don't buy. Blue line up, buy. Blue line down, don't buy. Blue line up, buy. Blue line down, don't buy. Blue line up, buy. Blue line up, buy. Blue line down, don't 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 buy. Oh, blue line up, buy. I hated Ford for 6 years. And then all of a sudden, I came in the room and said, I love Ford. And everybody said, Joe, you're just jumping on the bandwagon. I'm like, no, blue line up, buy. Blue line up, buy. Blue line down, don't buy. Blue line up, buy. All right. Blue line up, buy. We start buying it. We start buying Ford around $7, $8. Nobody understood except for a couple of people that's been following me while we were buying it. I gotta understand how did you know to buy this, Joe? I said, blue line up, blue line up, blue line up, buy. Blue line up, buy. Blue line was up. That means that, because psychologically, what does that mean? It means that the pension funds and mutual funds that were buying this stock was willing to buy it at a higher price. This is what we call price action. When you're willing to buy it at a higher price for a long time, over the average price, that means that, see, pension funds and mutual funds don't buy things like y'all do as traders. Y'all buy things and then be out of it in 3 months. That's not how mutual funds and pension funds operate, because y'all ain't hollered at a pension fund or a mutual fund manager. And I have. And they say, you know what, Joe, the way that we approach the market is how most people approach the market. We're going to put, let's say, $10 million in the Ford. But we're not going to put it all in at one time, because that's not how money managers operate. If we're going to put $10 million in Ford, we're going to spread it out over a 2-year period. And we're going to put a little bit in every single month so we can catch the highs, we can catch the lows. But we're doing it because we now notice that the 200-day moving average is angled up. Bam. Free advice for y'all. All you got to do is talk to somebody that's doing it, and then you learn the market. The problem is y'all learning from thousandaires that think they know the market and they don't. All right, y'all got to stop doing it. You got to stop doing it. You got to start talking to the people that are actually moving the market or making money in the market, and they got to show it to you. We're in a day and age where people don't like to show stuff no more. I won an NBA championship for the Chicago Bulls. Look at my rings. And Jordan's like, you weren't on my team. And they're like, yes, I was. Because look at what my YouTube says. Look at my YouTube pictures. I'm holding the trophy. You find out it was one of their cousins that was there that night when they won. And now they just legitimize themselves. And I'm laughing. Y'all think this is funny, but 99% of the people y'all learning from, this is what they do. And then they don't know how to teach you how to be in the NBA or how to get an NBA championship. And then you're now feeling like the stock market is a gamble because they didn't show you simple basic tools like buying at the 200-day moving average. Okay, Ford 13. This was an easy move. We now at 20. I done made everybody money this year off of Ford. Y'all know how many people I fought with Ford? Like, there's some people, I get it. Like, there's some people in the room that didn't buy Ford because of their personal reasons. I have stocks that I don't buy for personal reasons. So if oil hits the 200-day moving average and it's angled up, I ain't buying it just because I don't buy oil. I just don't. I don't buy natural gas. I don't buy oil. People already know, don't even bring it up around me. But if I was analyzing the stock for you and we were looking at the market cap and looking how much it can grow and seeing if it could hit that value, I'm going to tell you that that looks like a solid buy. And that's what I do during these segments. I have my personal opinions, but we all should be on the same page because this is the truth. What you're looking at right now is the polygraph. There is no lying when you see this. When a 200-day is angled up, that means people are willing to buy it at a higher price. And it's pension funds and mutual funds is buying it. So Ford became a losing stock for 5 or 6 years, and now it's a winning stock. And now you should be waiting for it to come down and hit this 200-day again. And when it sells off, it doesn't mean that there's something wrong with it. It just means that if I just bought it at 7 and it just went to 21, if I had $10,000 and that 10,000 is now worth 30,000, maybe I want to take some of my profits. Maybe it comes back down to this 200-day. And then I can reinvest those funds and make money to the upside again. Because if I take out my little tool and I say, how much will Ford lose in value if it gets to the 200-day? 30%. You should already know that. All right. When Ford is 30% off, that should be a period where I should be buying it. It should be close to the 200-day moving average. When it gets there, you get alerted. If you have the TTM trend or the John Carter on your charts and the 3 candles go green, you might be able to take a shot. 100 days later, you might make some money, right? If you're trading options on it. All right. Think like a millionaire. All right. So that's Ford. Let's get to Bitcoin. I know y'all didn't think that this worked on Bitcoin. Watch this. Same process. How much is Bitcoin worth? A lot of y'all don't think, oh, it's worth $50,000, Joel. No, it's not. That's how much the coin cost. That's how much it costs to own a full coin. That's not how much it worth. That's the price. That ain't the value. That's the price. Y'all know the price of everything and the value of nothing. All right. So when you pull up Bitcoin, y'all can do all of this on Yahoo Finance. You pull up Bitcoin. You see that Bitcoin's worth $1 trillion. But Joe, my uncle said that this snake oil is worthless. No, it's worth $1 trillion. Well, that's just a value that somebody just gave it. No, it's not. It's an actual $1 trillion that was invested in this coin. This is real money, guys. This ain't fake money that you see right here. That's not fake. That's $1 trillion sitting in Bitcoin. Now, if everybody says, oh, no, it's fake, we want our money back, and we try to pull from it, yeah, $1 trillion can pull from Bitcoin and take it to zero, but that means $1 trillion is going to be dispersed. This is real money. You would know that if you knew the value of things and not the price. So the price of Bitcoin is 50,000. The value of Bitcoin is $1 trillion. So when this hits a quick question. If this goes to $2 trillion, what is this going to go to? Simple. If this doubles, this doubles. What did Bitcoin do in the last 5 years? It's going to piss you off. Back in 2019, I bought one coin for $5,000. Everybody thought I was crazy. Why did I buy it for $5,000? Did I buy it for $5,000 because I thought it was going to $1 million a coin? Yeah, I did. But where did I get that $1 million from? Right? I want you guys to say to yourself, what would Joel do in a situation like this? If I'm buying something, I'm buying it with a goal to make a certain amount of money. Otherwise, I'm not investing in it. So the next time you guys get a crypto, like a Dogecoin, I don't care what the stupid stock price is. I don't care that it's 18 cents. I don't care. I don't care. What I care about is this. $20 billion. The only thing that I care about is, can this go to 100 billion or 200 billion or 1 trillion? Because that's where I'm going to make my money. I'm not going to make it by this because somebody's willing to pay $5 for that. That's rookie investing and trading. We're not rookies no more. We're trying to be on the 10% and 1% side and quit thinking like the 90%ers. Start thinking like the 10%ers, the 1%ers. The 1%ers are saying, this is 20 billion. If this goes to 100 billion, I'm going to make 4 times my money. That means this is going to go to 72 cents. Period. If this goes to $1, I'm going to make 5 times my money, meaning that this has to go to 125 billion. Can it go to 125 billion? Well, Bitcoin is $1 trillion. So if this $1 trillion and Dogecoin goes to 125, it can still be 1/10 the size of Bitcoin. That's realistic. I don't think it's going to be bigger than Bitcoin. It can be 1/10 the size. Do y'all know y'all could have figured out where Shiba was going to just by looking at Dogecoin? A lot of y'all didn't know that. How? How, Joel? Because Dogecoin was what? A dog, right? Dogecoin is short for doggy coin, right? It's a dog, right? Everybody knows that. You know, you pull up Dogecoin, it's a big old dog, a cute little dog. Shiba Inu was also a dog. So you had a dog coin that was already worth 20 billion. And then a new doggy coin came out. So the first value y'all should have been thinking about was, well, this is $1 billion and Dogecoin is a dog coin and it's 20. This is $1 billion. This is 20. This is $1 billion. This is 20. This is $1 billion. This is 20. I can make 20 times my money. I don't care about the stock price or the coin price. When I was investing in Shiba, I was investing in Shiba until it got to the value of Dogecoin. And then I sold it. And I sold it at the highs. And I told everybody, sell it. Joe, you don't know what you're talking about. It's going to $1. All right. Who you listening to? I bet you your $1,000, your thousandaire uncle. It's going to go to $2 because that's what I read in a Reddit room. All right. I'm out. I've been out. Took my profits, laughed, was in it with you, but you didn't know what it can go to. All right. Trying to teach you guys what to look for. All right. So Bitcoin. We saw that you could have made 10 times your money. Why did Joel invest $5,000 in it 3 years ago? Because I was thinking, what can it go to? When it was $100 billion, it was a $5,000 coin. So I just did simple math. I said, well, if it's 100 billion at 5,000, if it ever got to $1 trillion, it's going to be 50,000. And I said, you know what? I can literally invest 5,000 in this and I can go put a down payment on an exotic car that I've been thinking about buying. Imagine being able to buy your favorite car for $5,000. That's what I did. All right. I mean, the car costs more than that, of course, but that's what I did. I took a $5,000 investment and said, if this is going to move, I'm going to drive the car that I want because I ain't going to pay 50. But I'll let this bad boy grow to 50, and then I can go get what I want because I can be aggressive and conservative at the same time. Mind you, this is the same dude that meets with his financial planner every twice a year. And my financial planner told me, do not put my money in crypto. And then when it got to 50, I was looking at her like this. What you got to say now? Right? And I sold it. We laugh about it all the time, but their jobs is to make sure that you don't go crazy with your funds. But my job is to tell you you need to go crazy. You're living, guys, live a little bit. Be a little bit more aggressive in some of your investments. The only way you're going to get there is you got to be aggressive. All right? So, 100 billion, I thought that it can go to a trillion. Why did I think it can go to $1 trillion? Because Apple was $1 trillion at the time. There were other assets, there were other commodities that were $1 trillion. Well, I wouldn't say commodities. Gold was 14 trillion, right? Aramco, which was an oil company, was 2 trillion. So it could get to $1 trillion. Investors could invest in it until it got to $1 trillion. Well, guess what? Apple just paved the way for investments to get to 3 trillion now. What if Bitcoin got to 3 trillion? What's the value going to be? You do everything backwards. If Bitcoin goes to 3 trillion, this is going to be a $150,000 coin. Oh, that's how it works. Yeah, that's how it works. Y'all so consumed with this big old number that nobody is going to pay 150,000. Nobody's gonna pay $5,000 a coin, Joel. That's a gamble. You can lose all of it. And I'm like, yeah, but what if it grow 10 times its value? Y'all so consumed with losing 100%, you can't make 1,000% because you too consumed with losing 100. If you lost everything, that's 100%. I know the numbers I just said sounds crazy because you're like, hold up, if I lose everything, I don't make no money. That's because you still caught up in losing everything. 90% of my assets is cool. I ain't never got to worry about nothing. My 90% of my assets gonna grow 10%. I don't care. The other 10%, yeah, I can lose that. But I'm gonna tell y'all something. Out of the last 13 years of investing, I had one stock go to zero. One. And that was some cannabis stock that I had invested in. And I only had like $1,000 invested in it. Stocks normally don't go to zero, especially if you're buying something that has $1 billion market cap or higher. You can't be afraid to invest in something because the market is rigged to go up. When you hear that the government is printing $4 or $5 trillion, where y'all think that money's gonna go into? It's gonna go right into the stock market. We've seen it happen 3 times already, right? We saw it happen in 2008, 2009 crisis, right? When Obama got the $800 billion bailout, the market went up 2 or 3 days after the bailout, after it was announced. Trump saw the same thing happen and was like, "Oh, this is how you get the market to move." So then he had a similar type bailout, right? You remember it was like $1 trillion. That was number 2. Then when Biden came in office, we had to put an influx of money into the market. And then what happened? It went straight up. We saw it happen 3 times in a row. And now they about to create the biggest package ever, 5 times bigger than the last package. And y'all getting out of the stock market? Y'all ain't thinking like millionaires. Y'all thinking like, I don't know. I want a piece of that 5 trillion. And this is where you're going to get it. All right. So Bitcoin. Let's look at Bitcoin. I'm gonna get to y'all stocks. Y'all think that I don't, y'all know that I get to everybody's stock. But I gotta teach it to you so that when we see it, you know what to look for. Joel, if you tell me that Bitcoin hit this 200-day moving average, I'm gonna lose it. Well, start losing it. Because in 2019, when Joel, actually I started buying, I don't know, when did I buy it? Right here. 5,000, somewhere around here. Start adding to some Ethereum right around the March lows. Yeah, bam. Now, the 200-day was angled down here, so you could have waited. You could have waited until it started to rise a little bit, but everybody kept buying it right there. They was like, bump that. I'm just going to buy it. Joe, bump it. 200-day work on everything else. Why wouldn't it work here? And you're right, it worked. And check this out. Y'all know what we're bumping up against now? It hit the 200-day rose. Didn't give you an opportunity to get in Bitcoin. Then Bitcoin sold off. Y'all remember that big old sell off? Y'all know what that big old sell off went down to? The 200-day moving average. You gotta be kidding me, Joel. Nope. Why did we know to buy it? Because it was angled up. Went green, 1, 2, 3. You could have bought it right here. You would have been nervous for 5 days. 37,000. That's too much. Well, if you thought 37,000 was a lot, that bad boy went all the way to 70. And then it dropped. And everybody just said, oh my God, it's dropping. Y'all know where we are right now as we speak. The 200-day. You want to add to Bitcoin, this is where you do it. This is where you do it. And guess what we just got? 3 green candles. How many of y'all going to go out there and buy it? I don't trust it. I'm going to watch it this time. Okay. There you go. That's how it looks. That's why people don't do it, because that looks scary. See, this used to look like this. And this used to look like this. See, that looks scary, right? And that used to look like this. And that used to look like that. Look scary. Look real scary. Like, why would somebody buy here? Because y'all care about here and not where it can go. Where it can go. See, psychologically, if you own crypto and it started to sell off from here all the way down, you probably got all the sellers out of it. Anybody that was trying to sell probably out. This bad boy started going blue on this squeeze, it's a wrap. And that's exactly what it looked like. It looked like we about to start pushing higher. You know why? Because Bitcoin is a hedge on inflation. And if we're about to print $5 trillion and drop that into the market, and this is a hedge against inflation, digital gold, this is what you got to be invested in. Can it go down and stay underneath the 200-day for a while? Yeah, it can. Y'all have seen that happen before. It struggled right here from May the 18th all the way till July the 18th. Like, that was 60 days of pain. You might get another 60 days of pain, but as long as this 200 days angled up, you're good. All right, let's look at some Ford January calls real quick. All right, Ford January calls. A call option is an option to the upside. Is there unusual options activity? The answer is yes. At what strike? 21. We're at $20.80 now. So, I mean, we are already there. What's unusual about this? Well, you got 8,000 contracts being bought right here and only 1,000 or 2,000 puts. So it's just like people betting on games. Now, in the real world, it don't matter if 90% of people are voting for Mike Tyson and the other 10 are voting for the other person, right? In the options world or the stock world, though, where you see the most volume is usually where the stock tries to go to, because the way that the stock market works is it works off of orders. So if there's a lot of orders placed, the price is going to move to those orders. All right. It doesn't work the way everything else works, right? So if there's a lot of orders being placed at the 21 strike, a lot of action at that price, usually, I wouldn't say usually, but more than likely, you have a high chance that it's going to get to that particular price. So that's unusual options activity on Ford. Let's look at Chewy. So Chewy is a play on pets. So if you have a pet, especially during COVID, so before we even look at the stock, we got to look and see how big it is. But Chewy did well during COVID, because during COVID, we were all sitting at home. We were, companies like Home Depot and Lowe's were doing well because Now that people are more comfortable with their houses, they're going to renovate them. Well, at the same time, they have pets. A lot of pets were being bought during COVID. So when all of these pets were being bought, they needed insurance policies, they needed food that you can using e-commerce, you can have stuff delivered. Like we even use Chewy because we have a dog that needs it. She has skin problems, but we have to buy something called, I think it's called Claricel or something like that. But she needs that for her skin, and we do that through Chewy. So when you look up Chewy, pull it up, see if it's publicly traded. Chewy is a $25 billion company. In the last 5 years, it grew from 24 billion to about 60 billion. I mean, it has growth potential. 25 billion. The beta is kind of low, which I don't like. But even in the last 52 weeks, it tripled in price. So that means if it triples in price again, that's not unrealistic, right? Because it's done it before. But if you're looking for a tenfer or to go up 10 times its value, you're being unrealistic. And if you buy this and it drops 20% and you don't realize that it can drop 20%, remember, guys, a stock that can grow 100% in 1 year, that means if a stock can double, that means it's more than likely going to drop at least 50% in the next year. That's another stat that a lot of people don't know. Most stocks that double and triple drop 50%. It's just what they do. If you're going to be volatile on one side, it's not volatile on one side and not volatile on the other. It might not drop 100%, but it'll go up. It'll go up from 0 to 100. Then it might drop to 50. Then it'll go from 50 to 200, and then it'll drop to 100. Then it'll go from 100 to 500, and then it'll drop to 250. It's just how stocks move. You got to know if you're dealing with a volatile stock or not. But Chewy, when you pull up the 200-day moving average, same thing. Now, why is the 200-day only half? Because if you don't see a full 200-day that goes across the board, that means that this company just IPO'd. Now, there's a rule in the insider trading room. The rule is if a stock has an initial public offering, meaning that it went from being a private company, like Chick-fil-A, for example, is a private company that hasn't gone public yet to allow us to invest in it. If a company goes public, we wait 3 months before we buy it, because the people that got in early, who were able to buy it at $20 a share, to stop them from selling it for $40 a share the day that it comes out, they most of the time will have a lockout period that's 3 months. So they'll say, look, we're going to let y'all get in early on the investment side. And when the stock IPOs, we're going to sell these stocks to these suckers that think that they're about to make a whole bunch of money. But you got to hold on to it for about 3 months and then sell it. Right? So we wait 3 months. So when this stock came out in June, you wait July, August, September. If you had waited until about September, you would have caught the stock somewhere near the lows, right? So, the stock dropped in price, right? Right around that September, started to go up. Joe probably would have bought it somewhere in this $25 range, right? Why? Because it broke this trend, started to go green. I would have bought it for 25. It dropped a little bit more, but the lowest that it dropped was 21. So I would have been down about 10%, and then the stock started to move. Some people would have bought it when it broke this trend and started to go green. All right. Then it started to go up, 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 up. It formed a 200-day. And then now, because this is angled up, you can use that as a marker of when to buy, but it hasn't hit the 200-day until recently. Right here in May of this year. Now, why is it struggling? Well, I think that Chewy is struggling because we don't have COVID. We're not sitting, well, we do, but we're not sitting at home like we were during the period where it had its most growth. So a lot of companies that did very, very well during COVID, your Pelotons, your Zooms, right, that literally blew up because of COVID, your Chewy's, they're struggling right now because they got a lot of their growth. Like Before COVID, it probably would have taken them 5 or 10 years to grow as much as they did in 1 year. So when you get that type of growth in 1 year, you're gonna see a stock kind of, not, I wouldn't say suffer, but it's gonna sit at a certain price for a while, because it's like buying a house on the beach for $100,000. Then everybody comes in, the malls come, and then that house goes from $100,000 to $1 million. Then it's gonna sit at like $1 million for a little while, right? Before it can get to that $2 million or $3 million mark. It can have explosions in growth, but then chill. And I think that's what's happening with your Pelotons and your Chewies and your Zooms, okay? And as you can see, now the 200-day is angled down. Joel doesn't buy a stock when the 200-day is down, because now people are not willing to buy it at a higher price than its average. They're willing to pay a lower price, which means that there's money flowing out of it. Now, if you want to take a chance at Chewy, I get it. It broke its trend right here, and then it started to go green on the John Carter. So it looks like it could go up to 75. So that's about $15 from where we are right now. But if I was a betting man, I mean, if you're going to buy it, that's where you buy it. Okay. But it can turn around because of the type of company that it is. So if you're thinking of trading it, I would trade it to the 200-day. If you're thinking about investing in it 5, 10, 15 years down the line, who cares? You buy it when it's on sale. All right, let's look at AMD. AMD, guys, is a semiconductor company similar to your Nvidia. So when you pull up AMD, you quickly look and see that it's a $186 billion company with a 2.0 beta. In the last 5 years, this stock went from $10 to $150. You missed that tenfer, right? But what did it do in the last year? It still moved in the last year. It went from $100 to $150. So you could have made a 50% return just by owning something like this semiconductor company. That's why it's up 5% today. You look at the 52-week range, you also see that it doubles. So if you think that it's going to get the type of move that it did here, you're mistaken, right? You missed this move, but it doesn't mean that it still can't move. But it looks like it can only probably double in about a year's time, right? Maybe a 50% return, maybe 100% return if you're able to catch it at the 200-day. So when you pull up AMD, using the same method, when do we buy? On the blue line. When do we buy? Well, the blue line is up. I can take a shot. The blue line is up. When the blue line is up, you can take a shot. You can take a shot right here. You took a shot right here. You took a shot right. Ooh, that was bad right here. Sometimes that happens. Remember though, that was what? Ooh, this was 2017. That was awful. But then it was angled down at the time, so that when it hit it, when this was angled down, people were not willing to buy it. And then now what used to be a support area becomes resistance. Now it has a hard time breaking through. Then AMD had to prove itself. It bust through the 200-day. 200-day is angled up. That means this became a very bullish, fundamentally good company. That means now, anytime it hits that 200-day, you better buy it, because it became a fundamentally good company. And you're technically buying it where all the billionaires and millionaires are buying it. Y'all see that? For free. I gave y'all this. For free. For free. Look at this. Look at this. And it just kept giving you money. Guys, that was way back in 2016. We just looked at 5 years worth of information. And now we way up here. Y'all trying to buy it way up here. Wait, it's going to come back here. It's going to. It does it once or twice a year like clockwork. All right, SE. I believe SEC Unlimited is I want to say it's a fintech company, even though it has C in it. I think it's a fintech company. All right. Same thing, 200 day, 200 day. Now we sitting at the 200 day. Guys, just because it hits the 200 day, don't buy it. Remember, the what would Joe do method is to let it drop. We want to see it go green. It has to start going green. Think of green shoots. It has to start, when there's a nuclear war, or when there's a bomb, when you start seeing green shoots and you start seeing plants start to grow again, that's when you should be buying it. I don't see any plants being grown. I still see destruction. So hold off on it until this starts to turn green. And I don't mean green candles. I mean green if you're using the John Carter. And then if you see it go blue on the squeeze, then you guys should take a chance at it. But let's do a quick analysis of it on the Yahoo Finance. It's a $120 billion company. Jeez Louise, look at what it did. I mean, it exploded in value. You're not going to get this same explosion in value because it's already 100 billion. You really believe it's about to be $1 trillion company? That's the only way you're going to make 10 times your money. It's got to be equal to an Amazon or a Google. Most of you guys never heard of this company. Okay. The last year, though, it doubled, right? It doubled. So that's realistic. It can double from here. It can get to 400 and then get to 250 billion. But anybody looking for this explosion in price in 1 year, you're being unrealistic. You're being unrealistic. Let's look at PayPal. All right, PayPal. PayPal, my favorite. I'm throwing all types of money at PayPal. Ooh, I'm loving PayPal right now. 5 years. What did PayPal do? It went from 42 to 190. That's a heck of a move. 52-week range, though, it didn't double. So if you're expecting a double in PayPal, you're being unrealistic. Now, it is on sale. It's 40% off. So the odds of it doubling by getting back to its all-time highs increases, right? So why am I buying it? I'm buying it because PayPal is similar to Visa. Visa is 473 billion in size. It's the comp. It's the highest price house in the neighborhood. PayPal is only 200 billion. And it's growing a lot faster. So I love it because as long as people are buying things, PayPal looks like the way to go, right? PayPal does well when we're sitting at home. PayPal does well when we're not sitting at home. It's great for small businesses. You know, if you're Venmoing, y'all know Venmo is PayPal. And look at what it's done. Look at the history of PayPal. I mean, every time it hit the 200-day moving average, I mean, is this going to be the one time it finally loses? 1, 2, 3. Let's count how many times it hit it and won. Right? Look at that. Every time it just keeps bouncing, Look at the PayPal bounce. Look at this. It's beautiful. You want to see stuff like this. And it struggles sometimes. Look, guys, it struggled from September to December. Everybody thought it was going to zero. It struggled for 9 months, but after that struggle, it was nothing but investors in it. Ooh, took a dip right here. That was March lows, and that was it. It was off to the races. And now we're sitting here. Now, here's what I don't like. I don't like that this 200-day is angled down. Ooh, that's ugly for me. But I'm buying this as an investment, and I'm buying it as a trade. Yes, I started to buy it when it started to go green, and it's green here too. Now, what am I looking for as a trader? As a trader, it still can get back to 255 and reverse and then go to zero like y'all think it's going to do, right? Stocks don't go down in a straight line. They're going to stair step. It might have a relief rally and get to 255. Even if it goes from 200 to 255, which is a $50 move, That's a 25% return just to get here. If it goes back to 310 though, from 192, that's going to be let's look at the return. The return on your investment is going to be about 61%. Imagine making a 61% return on a company like PayPal. It's going to happen. It might not happen in the next 3 or 4 months. I almost guarantee that at some point in your lifetime, PayPal is going to get back to its all-time high. And I promise y'all, I don't want to promise, right? But even if you earn 15% a year owning something conservative, right? You do 15 times 4 is 60. 4 years, I think PayPal will see its all-time highs in less than 4 years. You could still be conservative over here. But if I was just a little bit aggressive, that's a play that I might want to make. Okay. All right. That's how I think. All right, let's look at Palantir. This is a Cathie Wood stock. All right, if you're into data, this is what's going on with Palantir. So Palantir IPO'd. You guys can't see it, so let me. It's behind the name, but Palantir's lows were $8.90. Okay, so it IPO'd at $9 a share. And it was one of those stocks that 3 months later, it was higher. It never saw $9 again. It was one of those, I wouldn't say flukes, but it's one of those stocks that really, really started to run. It ran from $9 to 45. Imagine buying an IPO and then it made 5 times its money really, really fast. That's rare, right? You take 10 IPOs, maybe 2 of them will do this, right? They don't usually run like this. But it started to go green on the Carter, 1, 2, 3. Joel might have got in somewhere in the 23 range and still got 100% return. Came back. Looks like there was support. Looks like there was support right around here. Right? Where's my extension? Huh. So there was support. It broke that support, went a little bit lower, and then this still remains support. So this has been support for a very, very long time. Looks like the 20 to 21 level. All right, even if let's pull this up on the month chart. So it looks like we're approaching that support area now, right? So this was support. Now we're close to it. So if you're thinking of it as an investment, I've actually started adding it to my portfolio as a long-term investment, hoping that it can go from 19 back to 45. That's 100% return. Okay. Very quickly, if I looked up Palantir, just to see how big it is. Palantir is 37 billion in size. It grew, it doubled in value. Pretty nice little move. Has some growth potential, really small. I wouldn't say really small, but it's small. But in the last year, money's been flowing out of it. That's not good. 5 years, it looks like it's just been going kind of, well, that's not 5 years ago. That's 2020. So we're at that support area. So it's a company that just came out. It's having some issues right now. Let's look at NNDM. Never heard of this company ever. If it's not bigger than $1 billion, I can't look at it. Oh, look at there. We're right at $1 billion. 1 year, money's been flowing out of it. Not good. 5 years, money's been flowing out of it. This is a no-no for me. It has a high beta, but that beta's to the downside. So what would make a billionaire or a pension fund buy this? They ain't buying this unless the 200-day is angled up. They don't mind losing out on a little bit of money. They want to make sure that all of their buddies are invested in it as well, right? $1 billion does get their attention, but if I pull up NNDM, and there's no 200-day because it IPO'd and, oh, wait, why? Oh, we're looking at the month chart. That's why. Let's pull up the 200-day. You should have known not to buy this way back here. This would have saved you so much money just by saying, is the blue line down or up? When the blue line was down, it was an easy no-no. From 2016, you would have said, no, 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 no. 2017, no, 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 no. 2018, nope. 2019, nope. 2019, nope. 2020, nope. 2021, oh, that's still 2020. No, 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 maybe, yes. This is when you should have started buying it. You could have stayed away for 5 years. And then when it's finally started to go up, it started to go green. You would have said, finally, I can buy this. Look at there. It's going off on the squeeze. It's going off on the Carter. You take a shot, you buy it for $2, it go to $6 in 5 days, 7 days. It go from $2 to $6. Triples in value. Then it drops. Give you another chance to get in at 4. Then it goes to 8. Then it looks bullish. And we're what? This is 2021. So now it became a stock that people were investing in. 5 years, nobody bought it. Now they're finally buying it. Anytime it gets close to this 200-day, you might want to take a shot. Took a shot here. Joel's not going to buy it till it starts to go green right here. When that happens, 734, it jumps to about 9. Then it goes right back to 734. Probably would have been out of it. Then it started to go down red. Joel would have stayed away until it started to go green again. At least 3 candles. That's 3 candles, but it's going down. Here's 3 candles, so Joel probably would have bought it right there. I would have started buying it right around here at $6. Let's see what happens. Struggle, went from 6 to 650. Started to go down. If you're buying it as an investment, this is struggle period. But what you have that's going good is that, oh no, the 200-day is angling down now. That's not good. So I would have been looking at this, but the minute I would have seen this start to go, I would have taken a chance here because that's still flat. But then it starts to go down. So then you have to ask yourself, should you get out or stay in? Because now it's going down for a very long time, for over 30 days. Take a shot, maybe get out of it. You see 3 red candles, you want to get out because now it's the opposite. Because red, red, red means down, down, down. And as soon as you got those 3 reds, I could have told you exactly what it was going to do. Would Joel be buying it here? Heck no. Why? Because you got a downtrend. We don't know when that's going to end. 200-day is angled down. We don't know when this is going to end. We've seen it end horribly before. So you got to wait. You got to wait until it starts to go green again. All right. Boeing. Boeing is, Boeing is airplanes. All right. 200-day angle down, stay away. 200-day angled up, you can buy it. When are you going to buy it? When it hits the 200-day and goes green. It hit the 200-day there. It hit it here, here, of course. And now we're down here. Now, this isn't good. Y'all see this little angle going down? That's not good. But if you're going to take a shot, yes, you take a shot here. But I'm not expecting it to just run through this 200-day and go back to all-time highs. It can run to here. So if you're trading, yes, you can probably get about another 10% out of this bad boy. It might struggle when it gets here, but you got to see that this 200-day is angled down, and that's not good. It's going to have to hit it and stay there for a while, and then let this 200-day start to angle up before a Joel would buy it, okay? So be careful. So when you go and when you pull up Boeing, you ask yourself, why am I buying Boeing? Am I buying it to make twice my money? How much money can I make on it? Well, in the last 5 years, if you had bought Boeing 5 years ago, you would have made no money. Y'all know that? If you had bought Boeing 5 years ago, you would have made no money. It went up, then it came down, and we sitting almost at the same price it was 5 years ago. I don't really like buying stocks like that. I want stocks that's going to move from the left side of my screen to the top right. I get it. I understand that we got to sell Boeing. I get it. You can, they have these huge contracts with these other countries. I get the fundamental side on why it can go up, but that's not what investors look for. Like, investors move the market, right? The company can continue to make money. The company can make money and the stock can go down. The company can lose money and the stock can go up. All right. That happened in Tesla. Tesla didn't become a profitable company until 2019. They lost money all the way up to 2019. So how did the stock even rise during that time? Because investors believed that one day they finally was going to be profitable. And then when they became profitable, then they really exploded in price. All right. So be careful. We looked at AMD already, Sheena. So you probably want to go back to the earlier part of the video. Nio, what is Nio? Nio is the Tesla of China. Now, Americans are staying away from Chinese companies. China is going through a very interesting period right now. It's just very, very interesting what they're going through. All right, so Nio has a $47 billion market cap. All right, if you can see this, it ranged from 27 to 67. So it doubled in price in the last year. But what I don't like, well, I like this. 5 years, you made a whole bunch of money. This is one of my picks. I had another person, a very popular guru that really called me some nasty names for telling buyers to buy Nio 5 years ago. Right? They got a megaphone now. You think they'll ever come out and say, "Oh, I apologize, Joel. You made people fortunes." They bash me, but they never come back and say, "I'm sorry. I'm sorry for saying negative things about you. I'm sorry for trying to put you on blast. I'm sorry that I made a lot of your clients get out of Nio." Right? Nio made you a lot of money, and I was probably one of the first people that was even on the Nio bandwagon, because I was on the Tesla bandwagon, because I was on the electric car bandwagon. All right, one of the few people that was talking about the electric space back in 2016, 2015, heavily invested in the space, and I was able to buy a couple of electric cars off of my investments. But with Tesla being one of them, but we're trying to stay away from Chinese companies now, because China is really the government is really about not letting the entrepreneurs there make money because they want them to lose control, and they know that the control is through what they're invested in. So companies like Alibaba that I really, really believed in, which is the Amazon of China, that Jack Ma is well, he used to be the CEO of. Companies like that I really, really believed in, that I was heavily invested in, I had to lighten up my positions. I think I might be completely out of Alibaba. I got to go check, but I only push that one stock. But there's great stocks there. You got your JD.com, you got your you got your IQ, which is the Netflix of China. You have your Nio, which is the Tesla of China. So if you believe in them, it's the same thing, right? You look at the value, you see how much it can grow, right? You know that the other Asian companies like Toyota or Honda, you can go and see how much their values, how much those companies are valued at, and then kind of see maybe where this stock could go to if it was to grow in value. Or you can compare this electric car company to the other electric car companies that are out, like your Lucids, which is 60 billion, or your General Motors, which is 80 billion, or your Fords. So it's right there, all there together. And then you got Tesla by itself at $1 trillion, which is hilarious to me. You got all of these companies that's barely pushing 100 billion. Tesla trying to get to 2 trillion. That's absolutely ridiculous in my mind, even though I love the stock, I love the CEO, I love my car. But even I'm looking like, that's absolutely ridiculous. But, let's look and see what's going on with Nio, right? Nio. Same thing, guys. Doesn't matter. I don't care what chart you're looking at. 200-day lets you know if it's bullish or bearish. When it was bullish, everybody bought it here. Everybody bought it here. And it had a nice little push, guys. I don't like $30 to $50 is a nice little move. You're talking about a 60-something percent return. And then it went, actually, it almost doubled. It almost gave you 100% return. So people are going to take their profits. Then it hit the 200-day again, and then it did a fake out. Now, remember, all Chinese companies are doing this right now. And now the 200-day is acting as a resistance. Y'all see how it hit it and now it's reversing? That's why I told you guys, if somehow you get in, traders, you can trade it, but trade it up to the 200-day moving average. And then now you have a reference to when to get out. Because now that it's angled down, people are pulling their money from it until it starts to go up again, and then investors will hold it for a lot longer. All right. Nora says, I am new to trading. Realistically, what is the minimum amount of money someone should enter into trading with? 500, 1,000, 2,000, etc. The answer, Joel is going to trade no more than 10% of his total liquid assets. So if you add up your 401ks, your IRAs, and your, any amount of money that you have, take 10% of it. If you got $100,000, 10. If you got $1 million, 100 grand. I know. I said no more than 10%. So if you have $100,000 account, there's no reason why you should be trading with 50. Now, here's the thing. If you take webinar week and you start building your accounts, what's going to end up happening is those accounts are going to exceed your other accounts. It's just going to happen if you're doing it the correct way, looking at the market in 3 different ways: long-term, medium, and short-term. The problem is you guys got to be positioned that way first, where you're trading, right? And then you're also building an account by investing in yourself every single time you get a paycheck. My mother invests $50 every 2 weeks. We put $100 into our kids' accounts every single month, right? I put 10% of whatever I make from my trading into myself every time I get, if I have a quick, I don't do it monthly or bi-weekly. It's whenever I make money. Like if I take a trade today and I make $2,000, I'm gonna take $200, reinvest it into some type of stock into myself. Now I'm playing with 1,800. Okay. If you don't have any 401ks or IRAs, I get it. Let's say you get a tax return and you get $5,000. What I want you guys to start doing is, if you don't have your foundation in place right now, you need to set up an IRA. So with that $5,000 tax return, I'm gonna take 4,500 and I'm gonna put it into some boring stuff. Yes, that's when you go and put it in that boring S&P or NASDAQ, right? Because the NASDAQ represents about 100 of the tech stocks. It's been averaging about 20% a year. The S&P averages about 10 to 15%. So you can go either or. Most of your accounts are invested in something that mimics the S&P 500. Then you're going to take 10% of that. So if you got a $5,000 tax return, 500 is what you should start out with trading. Like if you're going to do options, if you're going to do anything, $500. You can do a lot with that $500. Believe me. Earlier today, there was $100 Apple trade that would have turned that $100 to $200 if you had taken that trade with us this morning. That was 100% return. So just because you start out with $100 or $200 don't mean that you can't get it done. And remember, my webinar week only costs $100, where you're going to learn how to trade the stocks, the options, and the crypto market anyway. So for you guys that haven't taken it, when it comes, make sure that you guys sign up or grab the videos that are out there right now. So the answer is 10%. All right. Next question is, absolutely got to have a plan for your winnings, right? You got to. Even when you go to Vegas, right? You playing roulette. All right. You make some money. Put some of that money aside and then, keep picking black and red, because the way that a lot of you guys trade is y'all pick black, and black might hit 20 times in a row. Y'all might take $100 to $1 million. But when you trade 100% all the time, you're setting yourself up to lose. It's just inevitable, right? It's just numbers. So you got to set money aside for when you lose, so that when you lose, it's not catastrophic. Some of you guys, when y'all lose, it's the end of your trading career, because you approach the market as if you got to win 100% of the time. And I approach the market where all I have to win is 30% of the time, and I still profit. So unless I'm trading less than 30%, I'm not doing well. Most of you guys have to win 90% of the time to actually profit, when the best traders in the world only win 75% of the time. So that's why a lot of you guys struggle. And if you don't understand those numbers, you gotta book a consultation with me. All right, let's look at Lucid. So we were looking at Nio. Let's look at Lucid. So Lucid is what we call the Tesla killer. The Tesla killer. Why? Because a lot of the engineers that worked on Tesla helped create this company. All right. And they got a $60 billion market cap. For an electric car company, it looks like 100 billion. Between 50 and 100 billion is the valuation investors in the world are giving electric car companies, even if you haven't dropped a vehicle yet, right? We'll look at Rivian in a second. So Lucid, just like a lot of these other companies, you got Lucid, you got FSR. If you guys ever seen a Fisker Karma vehicle, this is the cheapest out of all of the electric cars. You got Fisker, which is 5 billion. You got Workhorse, which is another one I've been telling you guys to buy. It's it's under $1 billion now. They're probably going to get acquired by somebody. You got you got Nikola, which is 4 billion. Okay, but they had a bunch of, Nikola was the company that came out and they had this fake truck, and then the CEO got in trouble. But it looks like they're getting it together now. And then you got your Rivian. Your Rivian, I've been buying this for my kids. It's about $100 billion. It just IPO'd about maybe a month ago, and they actually are building a $5 billion plant here in Georgia. So Georgians are loving it because they're going to bring work down here, and we're going to see a lot of these electric vehicles. Georgia has become a very hot spot for electric vehicles. There used to be like 2 Tesla dealerships down here. Nissan Leafs were heavily being driven around here. I mean, every other car you see in Georgia is a Tesla. So Georgia has become that hot spot for all businesses. And I'm not just saying that because I'm from here. All right. So just to give you an idea of Nio, because we were looking at Nio earlier. Just want to make sure you guys understand it works on everything. But yeah, you remember the 200-day moving average is angled down. Lucid, because it just came out, it just has, it just hit its 200-day and it was a buying opportunity. It looks like it's coming down in price though. Let the stock come down in price, people. It doesn't mean that something is wrong with it. It's just that traders like myself, investors like myself, really love buying this when it hits the 200-day moving average. All right. Next question is, so Joel, what would you say may be the next Tesla as far as a growth stock? I already told y'all, I think the next Tesla as far as growth potential is going to be somewhere in the semiconductor space. So your AMDs, I actually think Nvidia is going to become the largest company on the planet. That has been my call. But it's going to be some type of electric car. So I think it's going to be something like, I've been telling everybody, I think it's going to be Ford or General Motors, because Ford is only like 50 billion. Check this out. Check this out. When you pull up Ford and you look at its market cap, you literally got to say to yourself, all right, Ford has the F-150, right? Highest, number one selling vehicle on the planet. Ford only has an $80 billion market cap. Let's just say Ford went to 500 billion, right? If it went to 500 billion, is that out of the ordinary? When you think about it, you're like, well, I mean, Tesla is sitting at $1 trillion, right? Then you say, all right, Toyota is sitting at 250. So Toyota's sitting at 250. So it's 1/4 the size of Tesla, right? You got Ford that's 80 billion, right? But it's got the number one selling vehicle on the planet, and they got the F-150 that's out, and they got the Mach-E that's out, right? And the Ford F-150 hasn't even started being sold yet. And so the company is sitting at $80 billion, and there's no trucks on the road yet. You got Rivian that hasn't sold not one. Well, I think they sold one truck just recently. They literally haven't sold more than 100 trucks. You got Rivian sitting at 94 billion. They don't even have a truck on the road. So I'm like, all right, you got one more company. You got Volkswagen. And Volkswagen is sitting at 150. So you got Volkswagen sitting at 150. Now they got, Volkswagen also makes Porsche. So you got the Taycan and you got those types of electric cars. You got Toyota sitting at 250. You got Tesla sitting at 1 trillion. Is it out the question that Ford can get to 500 billion? If Ford got to 500 billion, that puts it at what? You take 500 billion, you divide it by 80. That means you can make like what, 4 or 5 times your money? That means this can get to about $100 a share. That means a $10,000 investment can go to 50. It might not be the next Tesla, but it can give you like 5. Let's say it gets to 1 trillion, 10 times your money. Let's say Tesla goes to 5 trillion. That means it's going to pull up all the other electric cars. So even if Tesla goes to 5 trillion, it's not going to be sitting at 5 trillion by itself and Ford still be sitting down here at 80 billion and they're producing electric cars too. It's just not going to happen, in my opinion. Can it happen? Anything in this world can happen. But Tesla is pulling up the whole industry. Rivian would have never gotten $100 billion valuation if Tesla didn't get to 1 trillion. It just wasn't happening because it took Tesla 7 or 8 years to go from a $10 billion company to 100 billion. Rivian came out the box at 100 billion and never even produced a car. How are they able to do that? Because Tesla has shown everybody what it is to be an electric car. So I use Tesla as the comp to try to figure out what the next Tesla can be. And that's how you gotta think it through if you're trying to invest in the market. So I hope that makes sense. One Facebook user says, I think Nio has potential. Look, guys, the Nio has a lot of potential. It's just that it's a Chinese company, right? And no matter how much you believe in the company, if it gets delisted, and delisted means that America is strongly considering taking all Chinese companies off of the New York Stock Exchange. That means they get no investor funding from the number one business, in the world. And if you take away your number one business in the world where we can't invest in that company, then it's going to struggle to grow in market cap. So we can't really, I don't know what to do with Chinese companies. I say stay away. There's enough electric cars that you can make money on instead of me trying to put all my weight in Nio. But if you have a portfolio where you buy, like, I know some people buy 10 companies and that's just one of the 10. Well, Nio can go to zero and it's not going to hurt the rest of the electric car space if you're positioned right and you're diversified. All right, someone said Square. All right, so Square just changed their name to Block, right? So why do I like Square? Well, if you like PayPal, you gotta like Square. Square is the cash app, right? Ain't nobody stopping, nobody's gonna stop using the cash app because of COVID, right? If anything, people are gonna use it even more. And what I love about Square also is you guys know you can go on your cash app right now and buy stock, and you can buy Bitcoin right now. Well, you can't buy stock because the market's not open, but you can go on your cash app right now, buy some Bitcoin, send it to one of your friends as a gift for Christmas. A lot of you guys don't know that, but you can do that through Square. So Square is what we call a fintech company, a finance company that has a lot of tech behind it. And that's a growing sector. I really love this space. One of my favorite spaces. I've been on Square since 2016, 2017, just like I was with Nvidia and Tesla and all of these other companies. This was one of the big five that I was looking at back then when I was talking about Facebook, Square, Nvidia, Apple, and Tesla. Those were my five. And they've done extremely well over the last 5 years. But why do we like it? It's 80 billion. What does it compare to PayPal? How big is PayPal? PayPal's 200 billion. Growth potential. Visa is 500 billion. So you're getting a company that's growing faster than Visa. What if it ever surpassed Visa? What if Square becomes the new Visa? You're talking about making a lot of money. That's how investors are looking at it, okay? Let's say it never surpasses Visa and Visa just grows in value. Visa's going to pull up all the other companies in that space. That's how it works, okay? So if you were looking at something like Square moves, guys. Square sells off 60 to 70% every year. This right here is normal. I hate to say it, it just is. Okay. So it's got a vicious sell-off. I tell people you just want to own this. You can trade it, but why buy it here as a trade? As an investment, I'm buying it as it goes down because I'm looking for it to go back here. It's gonna get back to 290 one day. Guys, imagine making $130 profit off of your 168. This is gonna happen one day. It's gonna happen. It's inevitable. It's inevitable unless the company just really does something illegal that causes the company to go under. the company should get back to its all-time high. You got a 90% chance of it happening. And Square usually within 18 months will go back to its all-time highs at some point. Maybe it takes 2 years. I don't know. But 100% return, if I put in $10,000 and it can be worth $20,000 and I can double that within a year, and then I can take that 20 and put it into something else and let that double, it's the fastest way to getting to 1 million, right? If I started off with 10 and it doubled, that's 10 to 20 to 40 to 80, 163, 26, 40, 120. You're talking about 7 years with a $10,000 investment. That's how you get to that million a lot faster, while your portfolios, your boring account, is still doubling every 7 to 10 years. All right, but you got to know how to go about doing it. All right. Hey Joel, how do you scale out of trades? How do you pay yourself as you're in profit? All right. So the rule of thumb is to always take out what you invested. So when I'm trading, guys, I don't trade unless I can make 100% return, period. Like, why am I investing something on my own if I'm not making more than the S&P and the NASDAQ? The S&P and the NASDAQ are your bases of conservative investing. So if I don't want to be conservative, I have to find things that can move more than 50%. So if I'm looking for things that can grow more than 50%, then I can't get out until I make 50% or more. So the rule of thumb is you always take out your initial investment so that can become a free trade. So if I invest $100 in an options trade and I was able to buy 5 contracts for $100, and that $100 is now worth $200, then you usually sell half your contract. So if I have 6 contracts, I sell 3, and then I can let the rest run as long as I want to. And to be honest, I'd rather you guys gamble profit than gambling on a loss, right? Your losses should always be a set amount that you want to lose, but I want you to gamble your profits, because that's how you end up. Yeah, I'm in trades right now that I've been in since the March lows, right? I have some trades now that I didn't even expect to be in for this long. I've been in a 14-month trade in Nvidia, where I showed you guys my my receipts. A guy came in there and was like, "Fake! This is fake. He's creating these he's creating these posts." And I'm like, "Dude, this is like a brokerage account that everybody else uses. Like, what are you talking about?" So I had fun with that cat before I kicked him out the room. But that was a 14-month trade where I made a 500% return. I didn't expect to make 500, but what if my goal was to only make 100%? Then I left 400% on the table. And that's what a lot of you guys do, which is hard for you guys to get to getting 1,000% return. But there is a way where if you take out half your investment and you just let the rest ride as long as you can possibly let it run, do that. Or ride something until you see it hit the 200-day again, or ride it up until it starts to go red on the John Carter. There's so many million different ways that you can get out, but the standard is to always take off half your position when it hits certain areas that you're looking for. And most people that are trading on their own is looking for either a 50% or 100% return. When you're trading options, there's no reason why anybody should be taking less than 50% if they're intraday trading, and especially if they're swing trading. Now, you can be real conservative in the options market. I get it. But most of the time, we're all looking for 50 to 100%. I mean, we've seen trades in the last couple of months that went 10,000%, right? The only way you're going to be able to catch that is you can't get out at a certain price. You got to like scale out, just like the Facebook user said, but you're going to have to create that strategy on your own. But what some people do is they'll book a consultation with me and we'll walk through what they're trying to do. And then I can help them realistically see if that particular strategy can work. All right. And all it takes is you guys got to start going backwards and just doing scenarios like, hey, if I put 20,000 in this and it goes to 230, right? It's as simple as doing this, right? You guys got to figure out how much money you want to make, right? So if you were able to get into this stock now at 168, and let's say it's got a downward trend, and you're like, all right, I'm gonna put 20,000 in, and I think it can, I'm gonna get some at 170, right? You should automatically say, all right, when it gets to 236, my 20,000 is gonna be equal to 27,000. How much of that do I want to pocket? Right? You might say, you know what, out of that 2,700, I need $3,000. So you sell half your shares and then you put a stop at the price that you bought it at. That means you're going to pocket $3,000 no matter what. You're up 7 grand, but you're willing for this to come all the way back to the price that you bought it for and risk $3,000, but you pocketed 3 grand. And then some people take that 3 grand and then they'll go put it in an options account. They'll chop that up into 10 pieces and then take 10 $300 trades. So many different ways you can go about doing it. But again, it comes down to, the strategy that you place for yourself. Someone said, Nima, I think that's somebody that's on this call. Yeah, I always wonder about Chinese stocks, though I thought Nio was developing a US-based plant. Remember, even if they create a US-based plant, if it's a Chinese company, even if they have a US-based plant, they might have to go private. They still might not allow Americans to invest in that company, right? We still have companies that are over in China that can get delisted, but it doesn't mean that they can't continue to make the products over there, right? So, it just depends on how our government wants to treat that particular stock, allowing us to invest in it or not to invest in it. All right, Don asked, if you use the ATR, which is the average true range, would you just calculate the move from the highs and the lows of the day? Yes, that's exactly what you do. When I'm using the ATR, which is the average true range, so this is what she's asking, right? What most of you guys do if you were trading something like Square is you have no idea how much it moves on a daily basis. You just buy it and pray, buy it and pray. What advanced traders do is before they even trade it, I need to know how much this averages. Does it move $2 a day, $3 a day, $7 a day, $10 a day? So that if I get in and I make $10, I know that that's probably about how much it's going to go. Think of the ATR as gas. If I fill up my tank, I know I can go 300 miles. It's not going to go 500 miles because its average range is 300, right? It might go 310, it might go 295, depending on my air conditioning, but 300 is the average. So you want to do the same thing for something like a Square. So when you pull up Square and you're looking for its average true range, before you even trade something, if you want to buy it on sale or if you're trying to ride it to the upside, the first thing I need to know is that Square average true range is $10. It's $9.66. $10, period. That means if I buy it at 168, it can probably go to 178. Or if it drops $10, maybe I can buy it on sale when it drops $9.66 from the highs, because this average true range is a range from the highs to the lows or the lows to the highs to the lows or the lows to the highs to the lows or the lows to the highs. So if I was trading something like Square and I know that it moves 10 points, if I was day trading it, right? And I'm going to pull up a clean chart so that we don't see anything, right? And shoot, it didn't even move $10. Was $10 really the move? Because it didn't move $10 a day. Hold up, let me make sure that's correct. Square. Yeah, it's supposed to move $10. Today was one of those anomalies where it didn't move at all. Square had been moving $10 every day for the past 14 days, and it just didn't move today, which Usually doesn't happen. So usually when you trade something like Square and you're trading it to the upside, if you get a nice little push, this should have gone from 167 to about 177. So the lows of the morning was 167. So if I was trading this to the upside, my goal, if I had gotten in here at 168, was to try to get it to 177. It got to 171 and it just ranged. It didn't, it really didn't do anything. Interesting. That happens sometimes. Let's see what happened on Friday. Let's see if it moved $10 on Friday. Same trade on Friday. Okay. Now on Friday it moved. On Friday it went here, 168, then it dropped $3, and then from this low, if you were able to catch it all the way to the upside, you know that it probably is going to run about $10. So my goal would have been 174 just off of this low. 174, right? It starts to go your way. Let's see if it gets to 170. Nope, it didn't go to 174 either. All right, it went to 168. So it looks like Square may have had some really, really big moves. And now I think in the last 2 days, it's only been averaging about a $4 move. So it had been moving $10 every day. Maybe there was something in the news. I don't know. This is an anomaly. Normally, you don't see a stock drop off like this. It dropped off like 50% of its normal move for the past 14 days, which is wild. So that's important. You see that it moved $4 a day and $4 yesterday. I mean, $4 on Friday, maybe even on Thursday. This was Wednesday. It moved 171 to 164. So that's what, a $7 move. So that's 7. Thursday, it moved 4. So 7, 4, and 4. It's not good. 7, 4, and 4. So that's probably telling you that Square, if you want to trade it tomorrow, probably is only going to move about $5, even though the ATR is telling you 10. That happens, especially on very, very volatile stocks. So I'm sorry it didn't pan out like it normally does. But yeah, something happened where it was moving really hard. Sometimes maybe if it's an earnings play, it'll throw off the ATR a little bit. All right, somebody asked, I'll try to get to all y'all's questions. I really am. All right, I'm about to get through it really, really quickly. All right, somebody asked about tip ranks. Yeah, I mean, I don't mind you guys getting tips off of different stocks. I'm not going to trade off of it ever. I'm going to take that tip, even when they rank stocks. I'm going to take that information. I'm going to pull up the polygraph, and then I'm going to analyze it myself. I've done that before. Somebody's giving me 6 stocks. I can trade any 6 stocks if they meet the criteria for me to get in, right? And that's how true traders will trade. I'm only going to trade long term if it hits the 200-day, or I'm going to day trade if it gets above this Ichimoku. If it's above this Ichimoku, I don't care what I'm trading, right? If I'm going to my percent gainers list, and this is a public list, I don't even know what PYR is, right? I wouldn't have traded this one because the ATR is 50 cents and it went 350. But let's say I was trading PYR. I know it moves 40 cents. I'm going to pull it up and I'm going to trade it if it gets above the ATR. I mean, if it gets above the Ichimoku, which it did. So y'all see how I didn't know anything about this company. I know it moves 40 cents. I would have gone down here. I would have said it's going to move at least to 290. Now it moves 40 cents, even though it moved $1, but it's above the Ichimoku. It went up, down, up. Joel would have got in somewhere around there and would have made money on this. Okay. Because it met all the criteria for the way that I want to trade. So I want you guys to think the same way. What's going on, Anthony? Hopefully you're still on. I've been on for 3.5 hours. All right. What platform are you using here with the candles and indicators? All right, this is the Thinkorswim platform, guys, which is offered by TD Ameritrade. So if you open up an account with TD Ameritrade is going to give you access to the Thinkorswim platform. In order for your Thinkorswim platform to look like mine, you guys are going to have to download this Thinkorswim chart setup video. All right, prices are going up next year, so make sure you guys jump on the bandwagon before prices go up. I know we talked about Ford a long time ago, but Monique says, I hated Ford as well, but Ford's doing really well now. Yep, blue line down, blue line up. Jerome's always laughing at me, ranting. What's up, Mr. Holland? If it's up, then it's stuck. I haven't heard that one. All right, Anthony says, what's your sell formula? Certain percent? It depends on size, right? I get out when it reaches a value. Like I got out of Bitcoin because it reached 50,000 a coin, which equaled $1 trillion market cap. I knew that Bitcoin was going to struggle at 50,000. I just knew it because it was a whole number, and it's a big number that every investor is like, yo, that $1 trillion mark is like heavy. You know, it's 100 billion, 200 billion, but trillion, you're going to sit there for a second. Then you can get to 2 trillion, 3 trillion, and then the next move is going to be that 10 trillion. If Apple or any of these companies get to that 10 trillion, they probably going to sit there for a very long time. Or if I'm trading options, it's going to be a percent. It just depends on whatever my strategy is at the time. All right. Target, y'all got me going all night long. All right, let's look at Target. Target. All right, Target. I'm going to speed through these. Target, 200-day. Y'all see that? God dang it, Joe. Yeah, I look at this like real estate. We all do. Bam, should have bought it. You missed it. Look at that. It hardly ever gives you a chance to buy it at the 200-day, people. It's a buying opportunity for Target. As an investment, as a trade, we gonna wait until it starts to go green. All right. I'm gonna let you guys pull up the market cap for it because I got to get through you guys' stuff because we're getting late and I need to go watch some football. What do you think about CRO? I like CRO. I think everybody should be buying CRO. So CRO, guys, is crypto.com. Crypto.com just bought I think they just bought one of the stadiums out in, I don't know if it was New York or Cali, but they bought one of the major sports franchises arenas. So crypto.com is growing. What I love about crypto.com, guys, is crypto.com is similar to Binance, and it's also similar to Binance, and it's also similar to Coinbase. So these brokerages that run these cryptos are making money, right? So you kind of want to make money on the crypto side and the people that are providing the crypto, right? You just want to be involved in all of it. And there's not too many brokerages out there that you can invest in, and CRO is one. And CRO is offered on Coinbase. So I've been building a nice little position on Coinbase, and then I'm saving my money, or I'm storing my money in vaults so that I can't have my money or my crypto stolen. All right. And then I can transfer it at any time into any of these other brokerages if I want to start earning a little bit of cash off of it, or earn, or try to get, decentralized financing against, my crypto. But for now, I'm building the position. It's not big enough where I care about, a dividend that I'm getting on it. In the crypto world, they don't call it dividend. I forgot what they call it, but it's just like having a dividend. Like in the stock world, if you own a stock, you can get a certain amount of money, percent wise, quarterly, depending on how much money you have invested. In the crypto world, they're doing the same thing, but to encourage people to invest in the crypto, you earn these ridiculous dividends. They're like 10, 15, 20. I done heard 50. I done heard 100% returns on a 12-month investment. So a lot of craziness happening in the crypto space. Be careful. Use a little bit of money to start out with. Believe me, guys, you can take a little bit of money to a lot. You can. What is MCIG? I got burned. I got burned by MCIG as well. All right. So MCIG was one of my losers for back in the day. It was right when cannabis started to open up. MCIG was a dispensary. So I tried to be smart and I said, you know what? I want to, instead of buying the cannabis company, I'm going to invest in the dispensaries. Well, MCIG was one of them. Everybody knows that if you're invested in crypto or cannabis, out of 10 of the companies, 7 of them are probably going to go bust. But if you're able to get a run on the other 3, you should be okay. And I got that run. So even though my MCIG didn't do well and I got burnt just like everybody else, one of my terrible calls, I got you guys in on IIPR, right? So instead of the dispensaries, I got you guys in on the real estate investment trust side with IIPR. And if you invested like me, you were able to run that stock until it became the largest cannabis company on the planet. All right, so that's IIPR for you guys that also invested in with me. Why do I love that company? It's a real estate investment trust. It's just like the IIPR is the company that rents out they pretty much rent the land for the cannabis companies, right? And this company literally went from $85 a share all the way to $250 from the March lows. And I mean, I had a gang of it. So I'm doing extremely well on this play. And if you notice, they also offer a dividend. So if you pull up the dividend is 2%, but that's decent. It used to be higher than that. I think it was at like 5 or 6% at one point. They've been decreasing the dividend because you've been making a killing on the appreciation of the company, right? It's the largest cannabis company on the planet. I also made you guys a lot of money in Curaleaf. If you didn't know this is the second largest cannabis company over here in America, and it's going in, IIPR and Curaleaf are going back and forth as being the largest. CGC used to be the largest cannabis company, and it's burning us now. Now look, guys, I got y'all in this stock when it was $5. So don't be mad at me. I got you in at $5. It went from $5 to 50 twice. And now it's struggling because it's a Canadian company, right? And Canadian companies, for some odd reason, are struggling in the space. So this is when it's great to be diversified in the cannabis space. All right, it's just better to be diversified, so that if you have a company that goes bust, your other companies can help your position. All right, as long as a position keeps making higher highs and higher lows, you are good. Higher highs is when your stock goes from the lower left part of your computer to the higher right side of your computer. As long as it's stair stepping up, you can stay with that particular stock. Once it starts to get lower lows, that's when some of you guys might want to take some profit. Some companies you're supposed to just hold on to, just hold on to them. All right, Boston Bear. I never heard of Boston Bear. You got me on this one. Oh, Boston Beer. 6 billion. Made you a lot of money. 144 to 1200. $6 billion company. What's the Sam is the same thing, 200 day. Could have just bought it every time it hit the 200 day. I mean, the formula works. But look, we got underneath the 200. You got to stay away. Blue line down, stay away, stay away, stay away, stay away. Webinar week will give you what it takes to be a triple threat in the market. I appreciate that, Mr. Holland, Mr. Charles Holland. Yeah, I'm going to teach you guys the stock market, the options market, the trading part, and I'm going to teach you how to day trade. So I'm going to teach you all three sides of the market. It doesn't mean that you have to do it all, but I always believe everybody should have a skill. Like I don't have to learn how to flip a house, but if I have to do it one day, I at least have the skills to be able to do it. And you guys should have the skills of knowing how to flip stock. Dawn says she's ready to call it quits with Jumia. Convince me why I shouldn't. I'm trying to hold on, but it's looking shaky. All right, guys. Jumia is one of my, every now and then Joel's going to have one of his crazy plays. This is like a super home run trade. Now, I'm going to explain to you guys why. All right. One word, Amazon. That's all I needed to say. E-commerce. Africa. That's all. Amazon, e-commerce, Africa. This is the Amazon e-commerce company for Africa. Now, why am I so interested in it? The Amazon of Africa. It's the Amazon of Africa. Okay? So, why am I so interested in it? I honestly believe this might end up being one of my greatest investments ever. I might have to wait 50 years for it to happen. But guys, this is a $1 billion company. Y'all keep saying to yourselves, what's the next Amazon? Well, the next Amazon is literally an Amazon in another country. I've done this 4 times and made money. I went and I bought Mercado Libre. That was the Amazon of Latin America. I made a whole bunch of money. I did this again in the Amazon of Canada, which was Shopify. I made a whole bunch of money. I'm trying to do it again in the Amazon of Africa. It's just struggling. And out of all the ones that I invested in, this is the one that was the cheapest. Because I don't care about what's going. I know that $10 billion is not a lot for a country like Africa. 100 billion ain't really a lot. If you can get the whole country, like let's say Jumia went the crypto route, which they better go to crypto route. If Jumia ever decided to go to cryptocurrency route and allow the whole country, people that have issues with banks, that are able to buy products and have it delivered through the cryptocurrency side of the market, and this is one of the companies that can provide that service, you're talking about $1 billion company that can go to 100 billion, which is 100 times your money. That's a $10,000 investment, guys, is going to $1 million. That's why I'm so into this company, because I don't care. I'm like, you know what? If you got a $500,000 or a $700,000 portfolio, you're supposed to take 10 grand and throw it at stuff like this, because I can make 10 grand in one of those portfolios in a day. I'm just talking from my own personal experience. I ain't trying to brag or whatever. I'm just saying, how am I approaching it? I'm approaching it in a way where if I lose all of my money, I'm good. But if this thing does what I think it can do, it can make $1 million for me on its own. This can be $1 million investment for me with a $10,000 investment. But you got to be in a position where you're able to do it. If you can't do 10, maybe do 1 and be thinking, what's 100 times 1,000? 100 grand. That's the type of potential that this company has. Why? Because look at what Shopify went to. Watch this. I'm going to show y'all real numbers. Shopify went to 174 billion. Y'all see that? That's a real number. Mercado Libre went to 65 billion. Right? This is Latin America e-commerce. Amazon is 1.7 trillion. What if Amazon came and bought the Amazon of Africa and just said, we're going to buy y'all out for 10 billion? That $10,000 investment going to 100 grand. Now y'all are seeing why I can't give it up. I just can't give it up. I put in the investment. I don't care if it goes to zero. It's just like my MCIG. I don't care that it went to zero because I make enough money elsewhere that I can take a chance like this, because if it hits the way that I think it can hit, it's going to be, I wouldn't say life changing, but I mean, who wouldn't take $1 million? I can go buy a beach house with that, right? It might happen 20 years from now. It might happen 30 years from now. It might happen in the next 5. All right. So that's the position that I'm taking in that company. It might go to zero. All right. I know I spent a lot of time on that one, but you have to understand what I'm thinking about. And when you think about where the stock is now, guys, the stock used to be a $70 stock. That means it's already 7 times built into it. It's almost like I'm already looking at a $70,000 investment minimum, because I got a 90% chance that the stock will get back to its all-time highs. But believe me, if this thing grows 7 times its value and it goes from $1 billion to 7 or 10 billion, you're going to see people running it and try to take it to 50 and to 100 billion, because I saw Mercado Libre do it. I saw Shopify do it, and Amazon's sitting at 2 trillion. The lowest price that this stock has been was $2. You know, we at 11. It might lose $9. I don't know. I'll buy more. All right. But, you know, I took a chance on it. I know I spent a lot of time on it. I know a lot of people are in it just like me, and I apologize, but you got to understand my way of thinking. I don't want you to put so much money in it that it's going, if you can't sleep at night, you shouldn't be invested in it. All right. If you change the time frame for the ATR to 1 day as opposed to 14 days, you will get 390. Oh, okay. Oh, I was looking at the wrong chart. 1 day as opposed to 14 days, you will get the 390 square. All right, she's just saying that if you change your charts to a 1 day and you start looking at the ATR, you'll see the moves for it. So, you know, go out there and check it out. Someone said that crypto.com bought LA Lakers Stadium. Guys, crypto.com is growing. You even got, I think they signed what, Matt Damon? So Matt Damon is one of their or is it Ben? No, it's Matt Damon. I don't know why I get Matt Damon and Ben Affleck mixed up. All right, it's called staking. When you're trying to get a dividend on the cryptocurrency that you own, it's called staking. It's just like getting a dividend. Remember, the cryptocurrency market is still the wild, wild west. So be careful and make sure that you understand what you're doing. I'm an expert, guys, and I still like to store my stuff in vaults. I love Coinbase because I store it in a vault. What's a vault? A vault is an offline server so that no one can steal it. The only way that they can steal your money is if you're online and it's available where they can jump in there and get it. But if it's offline, it's literally like I have it in a vault. Like you can't get to the vault because they don't even know where the vault is, right? So I store my stuff in a vault on Coinbase, and I don't really know too many other brokerages that even have a vault system. I know a lot of people hate Coinbase, but I'm like, guys, Coinbase is really, I know the fees are high, but if you're just investing and you're not really buying it over and over again, then you should store it on Coinbase. Now, if you're getting in and out of coins, I get it. Go to Binance, go to crypto, go to, you know, some of these other ones where the fees are less, but I'm not really as active in these cryptos as I used to be. I'm more active in the option space right now. Options are going to pay more than, there's nothing on this planet that's paying like options are on a daily basis in the stocks that you guys use every day. I love crypto, but there was no cryptocurrency that was up 20% today. And Apple and Tesla were up over 20%. I think Tesla was up 80% on some option plays, you know, in a 24-hour period. Crypto is just not doing that. What's the best way to get children and teens investing? I have a course called Mission Impossible, Kids, Teens, and Family. You can either download that particular video and watch it with your kids. It's fun. I have a game where at the end you analyze a stock within 1 minute, or you can book a session with me. It's a 2-hour session. It's going to be more expensive to book the session with me, but I'll do the session with you and your family. Excuse me, up to about 10 people, and I'll get them involved. It's the same video that I use in all of the churches and the schools that I go to teach. I use the same plan, and everybody loves it. It's called Mission Impossible. But you get them involved, and you teach them how to take things that are around them and invest it in themselves. Like my sons have a business called Your Junk, My Future. So they sell like my junk, and then they take that junk and then they reinvest it into something that's going to make money for them in the future. So they'll go and find an old golf club that I'm not using. They'll sell the golf club for $50 and then they'll take that $50 and then they have an investment into their sales. And then they'll watch their accounts grow, and then I let them buy whatever they want, right? They're into the Robloxes, they're into the Microsofts and the Squares and the Fitbits, and just let them buy it, because chances are in the future that stock is going to be higher. And what they're doing is you want to create that excitement for them, even if it doesn't really do anything. But more than likely, those stocks are going to go up in price. And when you start getting them excited at a young age, believe me, it stays with them. Cping, I believe this is a Chinese stock. Oh, yeah, this is a Chinese stock. As you can see on the charts, and I got to get out of here in 5 minutes, guys. I literally got to go watch some football. It IPO'd at 69 bucks. The stock IPO'd at 69. The rule of thumb is to buy it 3 months later. So March, April, May, June. You should have been buying it in maybe June at the least. That's 38 bucks. We're sitting at $29. So as you can see, we've been in a downtrend. You can only see a downtrend from charts. When you're in a downtrend for over a year, that's not good. When money flows out of something, guys, when people are pulling money for, dang, why is this not extended? When people are pulling money for a full year, that's not good. You want money to be flowing in it for a year. They're pulling their money for a year. That's not good. You want it to break this trend, start going green, get above this 200-day before Joel will think about investing in it. Okay. All right. Because we're towards the end, I'll pull up CPNG's. $51 billion company. Y'all see this? 5 years it's been going down. Well, my fault. It opened and it IPO'd this year, so that's not a real number. And it really hasn't been going down for a year, but it's been going down ever since it opened. I'm telling you guys, the reason why it's going down is because nobody is buying Chinese stocks. So maybe these are great values. I don't know. These might be the best investments in history, right? I just don't know. The Chinese government, with it being a dictatorship, I just have no idea. I haven't seen, a period where I can actually study and see what happens when a country does what it's doing. So maybe I got to go back and do a little bit of history and see if we've ever experienced anything like this. But I've never seen a government literally cut the ties of all the people that are rich, like literally shut down the real estate market, literally shut down all the investments in stock. Like they shut down everything. They kicked cryptocurrency out of the country completely. Like I've never seen a country do this. So I'm really frightened of Chinese stocks. So, just buyer beware. Oh, it's a Korean Amazon. Sorry about that. I thought it was China. So I guess it's Korean. But it's the Korean Amazon, 50 billion. Okay. If you're interested in it, e-commerce companies is what's in. The whole world is experiencing COVID. Everybody is having things delivered. If this is the Amazon of this country, I don't care what it is. Those are the types of companies that I'm interested in. If it's a semiconductor of that company, if it's the Amazon of that company, if it's the electric car company, it's the electric car of that particular, or the Tesla of that country, those are things that I'm interested in. Don said, Joel, no apologies needed. I respect your work and know you know your stuff. I know, but that's what I do. I want you guys to open up. Like, don't ever feel like you can't ask me about something, or if I get offended by it. I like it. I have people that bring up my most terrible trades all the time just to see how I react. And I don't mind talking about my wins. I don't mind talking about my losses. I just don't, right? Because this game is about winning more than when you lose, right? And you learn from some of your mistakes. But I want you guys to gamble. Like, you're supposed to gamble, but gamble in a way that you understand what the pros and cons are. When you can't answer the question, I see, if you're spending half your fortune on something like Jumia because Joel talked about it, and you're trying to hit a super duper grand slam. I get it. I get why, people can have, they can be sour pusses when it comes to the market. All right. So I'm going to have to get on out of here. Thank you guys. Thank you for sitting, thank you for spending time with me. I literally just did all my homework, right? I don't have to do any homework for the week. I've covered a lot of stocks. What I didn't do is I didn't put out a lot of alerts. But again, if you need your let's go through what I have to offer to you. Webinar week again. Webinar week, guys. You can still buy the videos from 2 weeks ago. All right, you're only going to have access to it to January 15th, but I'm going to stop sending these videos out this week. This is the last week that you can buy it for $65. You still are going to have access to it to January 15th. I'm just not offering it to anybody after this week. The prices will start going up to $95 for the next webinar week. I'll probably have one person on. It'll just be me and that one person for $95, and that's fine with me because I use that video to update, these videos, right? These videos here, right? These are the webinar week videos, right? I don't edit them, but it's chock full of a lot of great information. That's why I can resell them, and they're up to date with whatever the current news is. So that's why I continue to offer this. But I will be updating all of these videos. All the prices will be going up. I'm revising all of these videos. The Thinkorswim chart, I'm probably going to add the squeeze. All right, I didn't talk about the squeeze and the last Thinkorswim chart setup, so I will show you guys how to do that. If you want your charts to look like mine, that's the video that you guys want to look up. If you're having problems not understanding support, resistance, trend lines, and all that great stuff, then you want to probably take this video. That's why I made it the cheapest, because it's really what a lot of you guys actually need as far as the technical side of the market. This is going to teach you how to day trade the market. But remember, webinar week is literally this video, options, and day trading. All right. If you haven't downloaded my app, please download the app. It's free. And it's an excellent app for those that are active in the market and you're just looking for an edge and you need some alerts. And when you get that alert, you're going to learn how to use the ATR to make money. Again, I sent out alerts earlier today, and a lot of people made a lot of money off of that, Apple and Tesla. So I'm coming to you guys from Decatur, where it's greater. And I'm out of here. Make sure that you guys take that ultimate membership. You will have access to everything, every video. You get access to every webinar week. It's $50 a month. You get all the alerts. You get my portfolio. No reason why you guys shouldn't set that up, but it's only through the What Would Joe Do app. All right. And what's the quickest way to making $1 million? It's not saving $50,000 every year for 20 years. It's literally doubling your money. Doubling your money. If you start off with $1,000, you double that. You get into an investment and you double it 11 times. This is what you will get.